Here in London, and these are your top stories. China's top diplomat Wang Yi meets U.S. Secretary of State Antony Blinken in Beijing. Wang says the U.S. should cancel its illegal sanctions on China. Goldman Sachs becomes the latest bank to cut its forecast for China's economy, slashing its GDP growth projection for this year from 6% to 5.4%. And UBS chief executive Sergio Armotti has written an opinion piece saying Credit Suisse may be due for a massive downsizing of its investment bank. Now let's take a look at the futures. Again, a lot of the markets are actually closed in the U.S. No treasuries opening and no equities. So we could see a lot thinner volumes across the board. We're seeing a bit of pressure with the European stocks 50 futures down 0.5%. The focus firmly on China, the fact that we've been expecting some kind of massive stimulus on infrastructure and also trying to support the housing market, and so far we have not had that. Equities also opening here in Europe with the FTSE practically unchanged. I'm looking at commodities. Again, because of the China story, we're seeing pressure not only on Brent crude, natural gas, and some of the other commodities that we watch out for. And then we, of course, have the sovereign bonds. A lot of the bonds, not only issuance that we look at, but what's happening in the UK, because we have CPI on Wednesday and then the BOE on Thursday. You can see 30-year there at 4.485 here in the UK. Now let's also look at cross assets. What some of the other things we're looking at is moving. You can see S&P futures, so forget about that because that's giving us an indication of what's happening tomorrow, because today they're actually not opening. And then you can see renminbi 71549. So China and Chinese tech companies led a decline in Asian equities. Yuan dropping as investors reset expectations for further stimulus from Beijing. That's after a key meeting ended with little detail on a package to bolster China's growth. Now, for more on all of this, we're joined by Mark Cudmore, our MLive managing editor, and for a breakdown of geopolitics in the region, we're joined by Bloomberg's Bruce Einhorn. So thank you both for joining us. Bruce, let's start off with you. U.S. Secretary of State Blinken met with China's top foreign policy official in Beijing. What do we know about Blinken? What's been accomplished so far on the visit?
Well, Francine, this is the first time that a U.S. official at this senior level has been to China in 5 years, an indication of just how poor relations have been for a long time. Secretary Blinken had a meeting with the top Chinese Communist Party foreign affairs official. That meeting just concluded earlier today. It lasted for about 3 hours. That followed a marathon meeting, 7.5 hours yesterday. That meeting, both sides described as constructive. What we're really now waiting to see is whether Secretary of State Blinken will be getting a meeting with Chinese President Xi Jinping. That's not on the schedule, but it is still possible that he will have this meeting before he departs later today. President Xi did meet last week with Bill Gates while he was visiting China. So I think a lot of the impressions of whether this trip was really successful will hinge largely on whether this meeting does take place with the Chinese president.
Yeah. Mark, of course, away from politics, I don't know how much markets want to know. I mean, I imagine they do want to know some kind of concrete answers, but they're disappointed that we didn't get a very big stimulus on China. Will we get it this week?
disappointed that they don't have concrete details from Blinken and they don't have concrete details on the stimulus package that the State Council promised on Friday. They probably will get it this week, and they shouldn't be disappointed today. The State Council was communicating what the top leaders' intentions are, and they were saying very clear that there must be forceful measures, must come soon to boost economic development, and that those policies must be released in a timely manner. Now it's going to the lower level officials to kind of refine those exact measures, and they will be announced by kind of various government agencies in the kind of days or even weeks ahead. I expect markets will not be disappointed by the package of measures, and I just think they need to have a little bit more patience, and it'll come later on this week.
Mark, what else are markets looking at? So I know we spoke extensively about the UK, some of the crunch 30 hours that we could see between Wednesday and Thursday when we have the Bank of England decision, and then CPI 24 hours before.
Yeah, look, I think the US closed today. China has really stolen kind of the focus, and again, Asia as well, because Japan's stock's been on a tear and there's intervention risk there on the yen side. But I think as we get through the week, we'll move beyond the China story, hopefully with a bit of a positive spin at some point, as I've kind of outlined there. But then I think we'll kind of go much more to that focus on Europe, Bank of England. But of course, later on this week, we do have Jerome Powell with his testimony, his mid-year testimony, and I think they'll want to remove any kind of possible dovish interpretation that some people might have tried to take out of last week's Fed meeting.
So, Bruce, we have the U.S.-China. It's the first time that, of course, we have an official the U.S. official going to China in 5 years. But we also have the premier showing up here in Europe. So can Europe be the kind of the link between the two countries?
Well, Francine, this is the first big trip by the premier, the #2 official in the Chinese government, Li Qiang, since he took the job. He's meeting with Olaf Scholz, the German chancellor, today. Then he's scheduled to go to France, and he'll be meeting with French President Macron. It does come at a time where the Chinese are still trying to create a little bit of a wedge between the Europeans and the Americans over issues such as sanctions on semiconductor equipment technology exports to China. The Chinese also have to go a long way to try to improve relations with the Europeans that have really soured to some extent following the full-scale invasion of Ukraine. China has, of course, tilted toward Russia in that dispute, and that's something that the Chinese are going to need to try to deal with. Ursula von der Leyen, the head of the president of the European Commission, is scheduled to lay out tomorrow on Tuesday an economic strategy that will also include whether or not the EC sees China as a threat or as a partner or something in between.
Yeah, and Mark, and going back to the markets, look, it's very clear that Treasury interest rate traders could be underpricing the risk of the Fed adopting this kind of like hop and skip and jump approach. That's according to Arvind Ram. Where do you stand on Treasuries?
I'm very much in that camp that I think yields in the US have to go a chunk higher. I'm not so sure that 10-year yields have as much upside. I do think that as 2-year yields continue to go significantly higher over the months ahead, I do think the curve can invert further. And of course, that's a position that many people are offside on because they were betting on steepening this year. So yes, 10-year yields might go higher as well, but I think there'll be lower beta to the move that we get in 2-year yields. I think until probably August, September, until we start seeing the consumer constrain later on in the year, I think that's the general theme, is that yields will continue to grind higher against many people's consensus positioning.
So, Mark, overall, investors seem to be shrugging off once again some of the hawkish messaging we've been getting from last week's central bank meetings, and they're focusing on a narrative of soft landing and better earnings. Why does that continue over and over again?
Look, I think the idea of better earnings is a valid story. And I think, you know, I disagree on the idea of a soft landing narrative, because we're only getting a not landing yet because we haven't controlled the inflation problem. I think that ultimately controlling the inflation problem means curbing aggregate demand, which means ultimately we will get a recession, a hard landing. It's when that comes. And I think many people are starting to push that back until the fourth quarter at the earliest. But I'm hearing more and more voices saying it's not even this year, it's for 2024. I think what happens is that ultimately ultimately, at some point over the next couple of months, is that bond bulls capitulate and they start going, oh my God, we're not going to get these cuts. The economy is not collapsing. And therefore, it's when yields go higher, it's when we see 2-year yields actually go ahead of Fed funds rate and maybe up towards that 6% handle or something dramatic by that. That's when we get the crunch in the economy, and that's maybe when we see the turn. But I think the bond investors shouldn't be trying to prematurely price in the recession when it's not yet on the horizon.
Yeah, Bruce, we also have a great story actually on the Bloomberg terminal, which we'll push out on social media looking at global trade. And this is saying, look, if you look at our Bloomberg trade tracker, it's clear that global trade needs some help as China keeps on stumbling. Bruce, by the fact that there could be a détente or a rapprochement, whatever you want to call it, between the U.S. and China and Europe and China, could we expect trade deals, or is that a long way off?
Yeah, I think we're still quite a ways off. The Chinese have been hoping to have some sort of trade deal with the Europeans, but as we all know, trade deals take years and years to negotiate. That would not be of much solace to people looking for any short-term boost to the Chinese economy. And as we heard earlier, Goldman Sachs, among others, has now downgraded its forecast for Chinese economic growth. China is still struggling as it tries to emerge from its post-COVID-0 isolation.
All right, thank you both for joining us for a nice roundup on this Monday morning. To get us started, Mark Cudmore, RM Live Managing Editor, and Bloomberg's Bruce Einhorn. Now, we're also getting some breaking news out of Sartorius. Our Joe Easton was bringing us, of course, this stock. Sartorius shares are now dropping some 14% after it's cut its forecast. So one of the big plunges that we're seeing, again, is they're not only cutting their forecast, but we really worry about what's coming up ahead. Coming up, UBS Chief Executive Sergio Monti hints at cuts to Credit Suisse's investment banking business and speaks of a culture change at the lender. That's coming up next, and this is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
I found the Fed's action a little bit confusing. I understand the arguments for not hiking at this meeting, but those arguments wouldn't point towards signaling two further rate increases. They wouldn't point towards significantly revising the forecast towards a stronger economy and more inflation.
Former Treasury Secretary Larry Summers there on the Fed's signaling. So we are 12 minutes into the European trading day, and for the moment we're seeing quite a lot of pressure across the board. Maybe it's because we were expecting that stimulus from China to be a game changer for the country, and it just has not happened. And then we look, of course, to geopolitics with the U.S. Treasury, actually the Secretary of State, Antony Blinken, being in China, and then the Premier being in Berlin. Now, switching to banking, and the UBS chief, Sergio Armati, has hinted at massive cuts to Credit Suisse's IB division. Writing in a Swiss paper, Armati said the firm had simplified its structure and had a prudent corporate culture at its core. Well, joining us now for more is Bloomberg's Jan Patrick Barnett. JP, thank you for joining us. So what are the biggest differences between UBS's investment bank and the legacy Credit Suisse investment bank?
So the biggest difference is that UBS years ago has started to align the investment bank more with its core unit, which is the wealth management, and treated the investment bank in kind of not a service unit, but mainly the activities to be supportive of the wealth management business, to attract clients there, to service the clients in that unit. And while Credit Suisse has done similar, they have never been that forceful in those actions. And so that's because like the risk appetite is very different in Credit Suisse, or has been very different than it was in UBS. UBS was more like the conservative business, service the clients, do all that stuff, while Credit Suisse was more like still in the trading thing, that has then led to the hiccups, like mainly Archegos, that we have seen as the main reasons for the downfall of the bank.
So, JP, what does it mean for morale of those at the bank?
Well, that's very interesting, because it's the second time now within a few days that we have a top executive from the bank coming out with a voice saying we will cut staff, we will align the bank more towards the idea and the morale of UBS. And I get the feeling that those messages are more for investors than they are actually for the employees. And it tells me that the managers feel like the first thing that they need to do is like make sure that investors understand what they're doing, and that UBS will stay the same and will save a conservative approach, a conservative business model, and that they don't care so much about the morale of the people themselves, and that this is something that they can handle later.
How many jobs will be lost?
Well, that's the big question. I mean, like Armati said, it will be massive cuts. The last time I checked, the UBS, the Credit Suisse Investment Bank, had about 17,000 employees. And when a CEO says it's massive, I mean, you always like assume it's about half of it. So we're talking about a couple of thousand jobs here. We also learned that about 10% of Credit Suisse staff already left the bank in the last couple of months and weeks. So we will see how much of that is like need to be forceful, and how many people feel like they want to leave anyway.
Okay, JP, thank you so much. Jan Patrick Barnett there for us talking about UBS. Coming up, we have stocks on the move, and then we'll, of course, look at China and possible stimulus. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Core inflation is very stubborn, and in our projections, we see inflation going to the target of ECB only sometime in 2025.
That's very far off.
Too long, too high. And so we think that some further tightening would be necessary to bring inflation firmly under control. And let me say why this is so important, because if inflation continues to run high, one, that means interest rates have to stay higher for longer. When they're higher for longer, financial vulnerabilities could get exposed. Two, high inflation, high interest rates, inevitably this is going to impact growth. And we want the European economy, the world economy, to grow. We worry that our projections for growth are kind of on the weak side. We only expect growth at 3% over the next 5 years. We have to get out of the inflation trap to create a better environment for stronger growth.
And that was essentially what Madame Lagarde also said yesterday. She also added, by the way, July, get ready for it, there will be another hike. The debate today in Europe, everyone's talking about this is, will there be another one in September? I'm not sure if you want to give me a number of how many more hikes, but is that something that you say, July, September, whatever is needed?
I would say Madame Lagarde, ECB, they're guided by data. They would watch the data very carefully. They would make a decision on that basis. If inflation continues to be resisting the actions they take, they will have to do some more. Of course, for the good of the economy, we also have to make a call to the fiscal policy side.
Yes.
Please don't spend too much, because you spend that pushes demand up, that pushes prices up, and then rates have to stay higher for longer.
And you met with finance ministers yesterday. Are they listening to you, or do they tell you, you know, my problem is there's elections across Europe, the energy situation, by the way, prices shot up yesterday still. It's difficult to fine-tune that. Do you feel they listen to what you're saying, or it's still very difficult to navigate that space?
They see the problem in front of them. I mean, we are in a situation when monetary policy is putting a foot on the brake. Well, if fiscal policy steps on the accelerator, we are for a very, very bad ride.
You're going to crush the car.
Everybody understands that. We would crush the car. The problem is that putting measures that support households and firms is easy. Pulling them is hard. And yet policymakers have to have the courage to let these measures expire. If we get hit by another round of peak of energy prices, then they can support those who need it, but take the time now, be prepared to be more targeted, so it is easier to carry on the fiscal front.
Well, that was the IMF Managing Director, Kristalina Georgieva, speaking about the risks of a slow growth environment in Europe with Bloomberg's Maria Tadeo. So happy Monday, everyone. We're 22 minutes into the European Trading Day. I think a couple of themes that we'll watch out for this week. Of course, that Jay Powell testimony on Wednesday is extremely important. He actually gives his semi-annual report to Congress. And we did hear from Federal Reserve Bank of St. Louis President James Bullard and his counterparts in New York and Chicago in the last couple of months. We'll again hear from them this week. The Fed keeping interest rates unchanged last week, but warning once again of more tightening ahead. So one is inflation, then inflation and the Fed. We also have inflation and the UK. Thursday is a huge day when it comes to the BOE, because the day before we'll also have some CPI out of the UK, and then overshadowing all of this is probably what's happening in China, set to cut 1- and 5-year loan prime rates, and decisions expected on Tuesday. Now, this is according to economists' forecasts, and overlay all of that politics with Blinken in China, and of course the premier in Berlin, the Chinese premier in Berlin. Now let's get your stocks on the move with Joe Easton from our equities team, and we start, Joe, Sartorius.
Absolutely, Fran. This is the big story out of the pharma space today, and also probably the biggest story in stocks in general in Europe. Sartorius cutting their earnings guidance and dropping around 15%, almost hitting down 20% earlier, and taking down a number of stocks with it as well, including Merck over in Germany, the big biotech and general pharma company, also Lonza and Evotec as well. Evotec was down a few percentage points earlier, has come up a bit, but as we can see, lots of red on the pharmaceutical screens today. This is a 25 billion euro market cap company in terms of Sartorius themselves. They make lab equipment and also general biotech as well. Morgan Stanley today saying that this report is worse than even the most bearish people on the street. Consensus earnings estimates could fall around 20%, and this is even after a pretty weak report at their last earnings update as well. Generally not expected, that one getting hit, and really the biggest movers all in the pharma space today, Fran.
Yeah, and then Joe, so if you look at Merck, I mean, there's quite a lot going on with a lot of these. Anything else that we should be watching out for?
So I think in terms of the pharma space, we also did have that AstraZeneca report on them spinning off their China business. That's helping with pharma as well. But in terms of the other sectors to watch, we are, of course, all looking at aerospace, given the Paris Air Show. We had MTU Aero today putting out a report that was actually slightly better than expected. They've raised their earnings guidance due to some changes in business developments. Essentially, their orders have been stronger than they did anticipate. They actually left their guidance unchanged at the most recent earnings report, which some people said was possibly a little bit conservative. And that is actually lifting today a number of stocks. So we've got Rolls-Royce on the screen from the UK, Thales as well in France. That one was up around 1% earlier, now up around half a percentage point. MTU itself up 4%. We've also brought up Airbus because there's a couple of reports for them. They are getting a potential 500 aircraft order from India, from Indigo. That would be their biggest ever deal, according to our reporters. Potentially even another order coming from Mexico as well. These are obviously being released in line with the Paris airflow, bringing on some of that news. There's going to be a lot more news flow coming from that, I think. But the aerospace sector pretty positive today.
And Joe, Nordnet.
That's right, so Nordnet, this is essentially the Swedish version of Hargreaves Lansdown. They've got a really cool ticker as well. It's SAVE, S-A-V-E, which I quite liked. This one, though, dropping. That was down 9% earlier, now down 6%. JP Morgan giving it their only sell rating, so they're going underweight ahead of earnings that are due out next month. They're saying there's been some weak flows in terms of money coming in, and also the company's having to compete for deposits. In other words, put up interest rates in order to get some of those funds back onto the platform. And also just generally, if you can get 4% on your savings, you're probably not as interested in buying into stocks and shares, that kind of thing. This is something we have seen at Hargreaves, we've seen it AJ Bill as well, and now Sweden's Nordnet, that one dropping 7%. That's a downgrade at JP Morgan, who goes underweight that stock.
Joe, thank you so much. Our equities reporter there, Joe Easton. Coming up, the world's largest air show kicks off. We speak to U.S. Senators Jean Shaheen and Jerry Moran live from Paris. Our Guy Johnson, of course, on the ground for us. Don't miss that conversation next. This is Bloomberg.
politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that
it.
Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. China's top diplomat, Wang Yi, meets U.S. Secretary of State Antony Blinken in Beijing. Wang says the U.S. should cancel its illegal sanctions on China. Goldman Sachs becomes the latest bank to cut its forecast for China's economy, slashing its GDP growth projections for this year from 6% to 5.4%. And UBS Chief Executive Sergio Ermotti has written an opinion piece saying Credit Suisse may be due for a massive downsizing of its investment bank. Now, when you look at a lot of the equities, remember, U.S. markets are closed today for Juneteenth. We're seeing pressure across the board as markets disappointing that we're not getting more stimulus or any decisive stimulus for the Chinese economy. Let's also look at some of the sectors that are on the move, and there is definitely a difference today if you're a bank gaining some 0.4%, or whether you're chemicals and construction, chemicals down 0.2%. That's probably also a China play. Now, the world's largest air show is back for the first time since before COVID. Much like previous years, the Paris Air Show will be all about the battle for the skies between the megajet builders, Airbus and Boeing. So let's get straight to Bloomberg's Guy Johnson, who's at the Paris Air Show with a robust conversation. Over to you, Guy.
Francine, thank you very much indeed. There is a huge US presence at this show, bigger than certainly I can remember for many, many years. The US is back, the Paris Air Show is back, and that is fantastic to see. Now, Congress is not going to be left out, and as a result of which we have a bipartisan team that has come from Congress, and the leadership of that team joins us now. We have two fantastic senators to talk about how the aviation world sits in Washington, D.C. Senator Shaheen joins us from New Hampshire, and Senator Moran joining us from Kansas. Both welcome. Thank you very much indeed. You both made it through the traffic gridlock, but I guess you probably are both fairly skilled in dealing with gridlock. Let's talk a little bit about where we are at this air show. We're in Paris, but we've got a number of big problems that we need to deal with. And one of the biggest, Senator Shaheen, is what is happening on the sustainability front. I talk to aviation CEOs that come out of the United States, and they say that Joe Biden's Inflation Reduction Act has given them a huge advantage. It is a huge tailwind. How important has that piece of legislation been for American businesses in this space?
Well, I think it's very important, and we've seen a lot of new startups, a lot of interest in new technologies that are going to make us more sustainable. And it's also a place where we can partner with our European friends and allies to work better and smarter. So I think it's been a great help to business and industry in the U.S., but it's also something that has reverberated around the world.
We're even talking about maybe potentially copying it in certain parts of Europe. Senator Moran, the US is here, Europe is here, huge presences from both. One thing we're not seeing here is a big presence coming from China. How important is it that the Europeans and the US work together to make sure that they continue to dominate this space, continue to dominate civil aviation and also military aerospace?
Well, we're glad to be back to the Paris Air Show. You can speak of this in terms of the business relations that develop here at the Air Show, but really this year's Air Show, while the interest and excitement is there, it's been absent since 2019 here in Paris. The excitement to be back here at the Air Show exists, but really it occurs with a backdrop of things going on globally that the industries represented here have a significant role to play. So we have the opportunity for the United States to showcase its capabilities, to make certain that the world knows that our technologies and advancements are at the forefront of global opportunity. And it's certainly a business issue, but the backdrop that is the most serious is what's going on in Ukraine and what's going on in China. We want the world to ally with those who are interested in freedom to fight tyranny. The defense presence here is something that we need to showcase to make sure our allies and our potential allies know that the United States is so capable.
The United States is so capable, and the United States at the moment is at the forefront of that. Where is the Republican Party? How convinced is the Republican Party that the war in Ukraine is something that should be supported beyond the spring offensive? If the spring offensive doesn't go well, will the Republican Party be there for Ukraine?
You know, we have about 10 United States senators here at the Air Show, largest contingent of members of Congress at an air show in its history. The 10 of us split about evenly Republican and Democratic, and certainly among us, the people, just if you polled the folks being here, there is strong support for Ukraine. We want to see them succeed. There are factions of both parties who are interested in less defense spending, that are interested in shifting our focus away from foreign obligations to domestic, more interested perhaps in China than they are in Ukraine. That's a very small part of the political dynamic of the United States. And for those particularly on that position that China is the most important, well, I share that view. But in order for us to demonstrate our commitment, what happens in Ukraine is the most important thing that's in front of us now to deter China from misbehavior.
Do we have bipartisan support on that?
Absolutely, and it's really the extremes on either end who have raised concerns about Ukraine. You know, I had a group of Ukrainian women fighters in my office a couple of months ago, and one of the things they said to me, I have repeated over and over to my constituents. The young woman said to me, give us the arms so that we can fight the Russians, so you don't have to. And when I say that to the people at home, they understand. And that's the message that we want everybody to get, that this war in Ukraine is about whether democracies are going to succeed. And you can bet that China, Iran, North Korea, all of our adversaries are watching very closely what happens.
Do you think, you said on armed services, was it correct that the debt ceiling bill ring-fence defense? Is that the right thing to do? Is the way that America is approaching and supporting the war in Ukraine in some ways degrading the United States armed services? How should we be thinking about that conflict in relationship to America's ability to, if it had to, fight the Russians? Let's hope that never happens. Or if it had to, let's hope it never happens, fight the Chinese.
I don't think so, because in addition to the funding piece, we also agreed to a supplemental support for Ukraine. But it's also invigorated NATO in ways that we haven't seen for decades. It's given us the opportunity to work together in a fight in supporting the Ukrainians that we haven't done in decades. Right now we have had the biggest air exercises going on in NATO that we've ever had. So I think it's been an opportunity, I don't want to say opportunity, it's been an event that has galvanized the Western world and the transatlantic alliance in ways that are important for the future in terms of our ability to compete and to fight against not just Russia, but China or whatever adversary we have.
Let's turn to domestic affairs for just a moment. Senator Moran, I spent a lot of time talking to U.S. airline CEOs. They're a little ticked off that the president is thinking about maybe suggesting that they should provide better compensation for passengers when service doesn't live fully up to expectations. And what they say is, you give us an FAA that's fit for purpose, and maybe we won't have some of these problems. This is your bailiwick. Is the FAA fit for purpose?
So we're in the process of reauthorizing the FAA, a political process, a legislative process that occurs hopefully over a long period of time. Our authorization bill lasts for 5 years.
Yep.
The FAA, its employees, its leadership need certainty, but most importantly, the industry needs certainty. So we need to have a structure by which the FAA has the authorities to do the things it needs to do long into the future. But those things will only be words on paper if we don't have this administration nominate and Congress approve a highly competent, capable, long-serving administrator. The airlines need certainty. They need the assistance that comes from FAA knowing what the rules are. But that can't happen without a person, without leadership. And it's been lacking. We've been joined by the acting administrator, the FAA, here in our visit. We're all encouraging her, but we want the administration to choose her or someone.
Do you have a name that you would like?
I don't. I mean, but I know what the qualifications are, and that's experience. It is understanding of the role that the FAA plays in consumer safety. It's an understanding of the business model by which aviation works in the United States and around the globe. But it's a person. They exist by the hundreds. And there is no reason that the administration can't find one, a man or a woman, that fits that qualifications, and there's no reason that the United States Senate wouldn't.
How quickly is this going to happen? I think the House bill came out of committee last week, and I think it's heading for the floor. Where are we with the Senate?
So the nomination will take a while until the president nominates somebody. That's the first thing. But we're working on the authorization bill, and both the House did pass a bill out of its committee last week. The Senate committee, of which I chair the aviation subcommittee, I'm the ranking Republican on the subcommittee. Not an opportunity to chair at the moment, not yet. But the point is that we are very close to a deal. In fact, we're arguing a little bit over about a safety and a pilot issue. But beyond that, the structure of what that legislation looks like has been agreed to by all leading parties.
You definitely don't have a name for me. You don't have somebody that you would like to see in that position.
No, I want to be a friend and supporter of whoever that person is, as long as they meet my qualifications.
And there's bipartisan support for that. And there's been a lot of focus on pilots. But the other aspect of the air traffic control system are the controllers. We also need to make sure that we're adding the controllers we need to keep the planes in the sky.
I was going to come to you on that. This is an industry, so weirdly, this is an industry, other industries have solved this problem, but this is an industry that is still struggling with labor. It is still struggling with figuring out how to get the right people into the right jobs at the right time and get them to do the job that we need. Why is aviation, do you think, you've been talking to a lot of people, why is industry struggling with that so much?
Well, industry across the board is struggling with workers right now. In my state of New Hampshire, our unemployment rate is below 2%. It's the lowest it's been in 40 years. That is a huge challenge, and we've got to look at ways to increase the workforce. We've got to look at training. We've got to look at our immigration system and what makes sense in terms of immigration, because right now we have very restrictive rules on legal immigration that we need to take a look at, and we need to let in the best and brightest who want to stay in the United States.
One of the problems is that, and it's not a problem, and it is a problem, but it's also a great occurrence. The demand for commercial aviation, the commercial side, the private side, is growing astronomically post-COVID. But at the same time, the U.S. is ramping up defense. We need many more workers, and they need to be highly trained and ready to go to work.
Senator Moran, Senator Shaheen, thank you both very much indeed for stopping by. Enjoy Paris. Francine, back to you.
Guy, thank you so much. A wonderful conversation there by our Guy Johnson at the Paris Air Show. Now, it has been confirmed, there was quite a lot of speculation that Antony Blinken would meet the Chinese president, President Xi, and that has been confirmed by the U.S. It will happen at 4:30 p.m. local time in Beijing, so we're just a couple of hours away from that. As soon as we have confirmation on what the two gentlemen have discussed, we'll break it, of course, on Bloomberg. For the moment, you can see renminbi 71574. We'll have plenty more on China, U.S. shortly, and this is Bloomberg.
Top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Welcome back to the Open, everyone. We're 45 minutes into the European trading day. A big week ahead, actually, when it comes to inflation, when it comes to central banks across the board. Now, a couple of things to watch out for. First of all, there is disappointment in the markets that China did not put a massive stimulus in place to try and shore up some of the infrastructure and some of the real estate. So we're seeing a couple of bets on what that means for example, some of the commodities across the world worth a little bit of pressure. Remember, U.S. markets are closed today because of Juneteenth. And then the other story is, of course, what's going on with the UK. The Bank of England on Thursday. Ahead of that, on Wednesday, we'll get UK CPI. Now, with the world's biggest air show kicking off in Paris, another European air hub is on quest to ban private jets. Amsterdam's Schiphol Airport announced its plans to ban jets starting in 2026. So what could be the consequences for the hop-on, hop-off jet industry used by celebrities as well as business executives? Well, Guy Johnson reports.
Ibiza, Innsbruck and Cannes, luxury destinations for Amsterdam's well-heeled jet set. Perhaps, though, not for long. Schiphol Airport has announced plans to ban private jets from its runways by 2026, setting a huge precedent for other travel hubs and generating plenty of controversy. As many as 17,000 private jets crossed Schiphol's runways last year, and the airport argues they're noisier and generate 20 times more carbon emissions per passenger than commercial flights. The plan was announced a few months after climate activists stormed Schiphol's tarmac to block private jets, and comes on top of the Dutch government's proposal to cap the total number of flights to and from the airport.
Every sector needs perspective.
perspective of the residents, of the people you work for the airlines, and for Schiphol itself.
The private jet industry says the unexpected ban will hit business travel the hardest.
Private aviation is a business tool, especially for Amsterdam, where the top 3 destinations are London, Switzerland, and France. So they're not really let's say, beach destinations and holiday destinations.
For now, the fate of Amsterdam's private jets remains unclear. The question now is, could the move accelerate the development of more sustainable alternatives?
Bloomberg's Guy Johnson there on Amsterdam's Schiphol Airport and his quest to ban private jets. Now, lots more to come, of course, from Guy Johnson, who's at the Paris Air Show today. He'll be speaking to Boeing's VP and commercial head Stan Deal. That's at 9:30 a.m. London time. And, of course, a reminder, you can get all of the latest from the Paris Air Show and everything happening in the French capital from our newsletter. Now, you have to be quick because there's a QR code now on screen to sign up to the Paris edition. You can just get out your phone and actually use that QR code. I hope you're faster than me because it takes me a couple of minutes to get that to you. But we'll keep it on screen there. You can get weekly updates from the finance industry, also from France, using that QR code. Coming up, a busy week for the UK with CPI data and the Bank of England's rate decision due. We discuss that next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg.
Welcome back to the Open, everyone. 51 minutes into the European trading day. We're seeing a bit of pressure across some ports as we're expecting some kind of massive stimulus going on China to try and help with infrastructure and real estate. We did not get that. And then we're seeing and hearing noise politically that actually things are going well between the U.S. and China. We also found out 10 minutes ago that Secretary of State Antony Blinken will meet the president of China, President Xi, at 4:30 p.m. local time in Beijing. That's according to U.S. officials. and that's in about 37 minutes from now. So that's a bit of excitement in terms of volumes. We could see very thin volumes because it is also a holiday in the U.S., Juneteenth. Now let's take a look at what the markets are watching out for today. U.S. equities and bond markets close for Juneteenth to commemorate the emancipation of enslaved African Americans 158 years ago. Today and tomorrow, the German Chancellor Olaf Scholz will host the Chinese Premier Li Qiang in Berlin. We'll also get China 1- and 5-year loan prime rate decisions overnight. On Wednesday, Fed Chair Jay Powell is set to deliver his semi-annual testimony to Congress before the Senate Banking Committee. We'll also get an inflation check for the month of May for Britain. Well, Bloomberg Economics expect May CPI reading to only show a slight drop. And the Bank of England then makes a rate decision on Thursday at noon. Stay with Bloomberg, of course, as we bring you special coverage from Threadneedle Street. And then lastly, on Friday, we'll get a lot of PMI data from Eurozone countries and from the U.S. So it's a crucial week for the U.K. with inflation data on Wednesday, a Bank of England rate decision on Thursday. The two events could finally bring a halt to upward momentum in interest rate bets. Let's bring in John Stepek with the very latest. John, first of all, congratulations on everything you write is interesting and quite controversial. I always tweet it out and they say, well, I don't agree with John. I was like, well, I always agree with John Stepek. So what do we know about, the headline inflation figures and what it means for the BOE?
Well, I mean, so this week we've got the Bank of England with its big interest rate decision. And the reason that interest rates have kind of exploded into the headlines again recently is because really, the last month we've had much stronger than expected, both the inflation data and the wages data. So markets now went from pricing in maybe a peak Bank of England rate of about 4 3/4, all the way up to now 5 3/4 and maybe even 6% some traders are betting on. Now, the grim reality is a Resolution Foundation think tank report came out at the end of last week, is that if rates go up to 6%, then a lot of people are going to struggle to pay their mortgages. A lot of companies are going to struggle to refinance their debt. And, you would have to bet on the UK finally seeing that long-promised recession at some point if rates go that high. So clearly that's why this has become, a massive kind of headline issue, particularly over the weekend. And it is, people are terrified because, there's about 1.3 million people have to refinance their mortgages over the next 2 years. And you're basically going from, you were on 2%, if you're staring down the barrel of 6%.
Right, and it's a lot. It's like £3,000, right? But by the latest calculations, do we know if a lot of the banks, and we hear this, right, from chief executives of banks saying that they're trying to refinance or certainly call some of the customers that may have the most difficult repaying to try and refinance earlier?
Yeah, and I mean, that makes sense. I mean, the banks obviously are under a lot of political pressure because they're still the bad guys from way back in 2008. So they are going to want to be very careful about, putting people out of their homes. But there comes, I think the big risk is that mortgage rates go up, people can't spend as much money in the shops, basically. The economy slows down, suddenly we get redundancies, and that's when you start getting forced sales and the kind of much more recessionary pressure. So the risk there, the thing is the bank will be aware of all this. The real problem for the bank is it is a bit between a rock and a hard place. On the one hand, it doesn't want a recession. On the other hand, if inflation comes in hot again on Wednesday, then it makes it much harder for it to justify kind of going a bit more dovish.
John, do you think we'll see 6% interest rate, or is that crazy?
At the
Probably
moment,
crazy. Your face tells me it's crazy.
Yeah, I think, that would be quite scary. I'm hoping not.
Okay, John, thank you so much. We'll get back more from John Stepek to try and understand exactly where interest rates could go. In 30 minutes, we'll hear from, we hope to hear from Antony Blinken, who's meeting the Chinese president, President Xi. That's at 4:30 p.m. local time, Beijing. That is 35 minutes from now. Now, that's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg. you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. China's top diplomat, Wang Yi, tells U.S. Secretary of State Antony Blinken his visit to Beijing comes at a critical time in the two countries' relations. Blinken is set to meet President Xi this hour. Goldman Sachs becomes the latest bank to cut its forecast for China's economy, slashing its GDP growth projection for this year from 6% to 5.4%. And Boeing forecasts an $8 trillion decade for the aviation sector despite economic headwinds. We'll hear from the plane maker's chief executive this hour, live at the Paris Air Show. So first thing is first, let's check in on the markets. Remember, it is Juneteenth in the U.S., so a lot of the markets are closed, including treasuries. If you look at global stocks, they do seem to be slipping after the Wall Street rally we saw on Friday fizzled. Chemicals, construction firms are pacing some of the declines in Europe. Telecom stocks outperformed amongst the individual movers. We have Sartorius slumping 15% after issuing a bigger than expected profit warning. Let's also look at some of the other things we're watching out for. Euro dollar 109.32. And then if you need to look at what exactly we know from the Fed, look, last week they kept interest rates unchanged, warning of more tightening ahead in the past, pausing rate hikes for 3 months after such a run of interest rate hikes has boosted stock prices. So let's also have a look at the European map. I think we have that. Otherwise, we get straight on to breaking news. And the ECB has said to tell banks to brace for harsher stress test results. Now, this is something that we had, of course, tried to figure out whether they wanted to make sure that every possibility was accounted for. European regulators telling banks that they have been sailing through some of course, the Fed stress or the stress test from Europe, and that was not working. So onto politics, and U.S. Secretary of State Antony Blinken will meet China's President Xi shortly. China's top foreign policy official, Wang Yi, has told Blinken to revoke the, quote, illegal sanctions on China and end its suppression of the nation's technology development. Now, the two foreign policy leaders have been meeting in Beijing. And meanwhile, the U.S. State Department said it was, quote, a candid and productive discussion. So for more on all of this, let's get straight to Bruce Einhorn in Hong Kong. Bruce, good morning. What do we know more about what Blinken has accomplished so far in the visit?
Well, Francine, I think the fact that there is going to be a meeting between the Secretary of State and the Chinese president is a sign that from the Chinese side, they think that the talks are going well. Secretary of State Blinken had a meeting of more than 3 hours with the top party foreign affairs official, Wang Yi, today. That followed a meeting yesterday that went for more than 7 hours with the foreign minister. This meeting with President Xi Jinping was not on the schedule, and there was a big question of whether or not it was going to happen. President Xi did meet last week with Bill Gates when Bill Gates was visiting China, and if Antony Blinken did not have this meeting with Xi Jinping, then it could have been a sign that the talks didn't go well. On the other hand, now we know that there is going to be this meeting. Excuse me. So I think people who are looking for signs that U.S. and China relations are on the mend should be optimistic as a result of this.
All right, we'll get you, well, we'll let you get a sip of water to try and understand exactly what Blinken and President Xi will talk at 4:30 p.m. local time, so it's about 25 minutes. I don't know whether we're expecting, Bruce, then some kind of readout on what the two discussed. Meanwhile, China's premier is on a trip to Europe, so what's on his schedule?
Well, to answer your question about the rate, we do know that there is scheduled a press conference that Antony Blinken will have early in the evening, Beijing time. So we do expect that we will hear something about the meeting with President Xi, as well as the overall sense from the U.S. side of how all these meetings have gone. So that should be happening in a few hours. To answer your other question, the Chinese premier is on his first visit overseas since taking on this job. He's meeting with German Chancellor Olaf Scholz today. He's going to be then traveling to France, and he'll be meeting with President Macron. The Chinese have been trying for a while now to try to create a little bit of distance between the Europeans and the Americans when it comes to things like technology sanctions at China. The Chinese also are going to struggle a bit because they have to try to repair relations that have really been frayed following the full-scale invasion of Ukraine by the Russians, because the Chinese have, of course, tilted toward Moscow in that war. And so that's something that is going to weigh heavily on Sino-European relations.
All right, Bruce, thank you so much. Bruce Einhorn there in Hong Kong. Now, we understand that Germany and Intel have also agreed subsidies for a chip plant worth 10 billion euros. Now, this was part of the Germany industrial plan, of course, to try and get more capacity of some of the crucial things needed, also to roll out artificial intelligence. Now, Chinese stocks paring losses following that meeting between Blinken and Xi. Earlier stocks were down after the State Council fell short of announcing more policy measures to support the Chinese economy. So joining us now is Maximilian Kunkel, Chief Investment Officer for Germany at UBS Global Wealth Management. Maximilian, thank you for joining us. When you look at some of the pitfalls, there does seem to be one thing that market can't get their head around, which is the Fed hiking for longer. What's going on?
It seems there's still some dissonance between, on the one hand, the bond market that is already looking for a new cutting cycle early next year, the equity market that is interpreting those potential cuts as a positive for risk, and of course, on the other hand, what you just mentioned, the Federal Reserve saying, look, guys, there's just not going to be any cuts that quickly. And the risk here is clearly that that gap is going to close at the expense of equities, because you're only really going to see that cutting cycle come through quickly in case of a risk-off event, be it with regards to financial markets or be it with regards to the economy. And if you don't get that cutting cycle, then of course that is going to pressure multiples, and that would in particular be an issue for US equities, given multiples are already quite elevated.
So, Maximilian, what does it mean for actually how you want to build your portfolio? So how much risk appetite do you want in there?
I think top down, everybody's now talking about this new bull market, but it doesn't really feel like a new shiny bull market. So top down, we'd still prefer bonds to equities, and more specifically, high quality bonds towards against US equities. But for everybody who's looking at the current equity market rally and looking for opportunities there, we think one should rather look at some of the areas that have lagged of late, as likely market participants are going to rotate out of momentum into contrarian, out of DM into emerging markets. And therefore, some of the things that we're looking at are, for example, high quality defensives, consumer staples, utilities, but also, for example, industrials rather than just technology. And at the same time, we early on talked about emerging markets in China more broadly. We're also tactically seeing an opportunity in emerging markets versus developed markets.
So, Maximilian, what does that say when you look at some of the bond yields? I don't know whether there's any opportunity to buy something in Europe or whether there's the similar dynamic as you see in the US and the Fed.
So we think that big picture, we have the peak in inflation that's in, and central banks are coming to the end of this hiking cycle. And when we're just looking at the past 7 cycles, what we've had in the United States, but similar things could be said about other regions. Over the next 2 years, post the last Fed hike, bonds quite meaningfully outperform cash. So we think this is a good time to lock in some of those higher yields through high quality fixed income. Maybe not go too long duration. So we'd rather have a barbell approach, short duration, and then some medium duration focus. But we do think it makes a lot of sense to lock in some of those yields with a focus on high quality names.
Maximilian, when you look at opportunities, when you look at some of the industries that could benefit from a China reopening, are you bullish or bearish on China?
So tactically, look, the story could actually be, if it wasn't for geopolitics, be a quite simple one. You have a weaker currency, you have lower inflation, you have lower bond yields, so you have a loosening in financial conditions. And when you have that, things can go very quickly. If concerns around geopolitics ease, if concerns around the state of the economy and support from the government eases. And we might get that. So short term, we are tactically positive on Chinese equities outright. But at the same time, also, of course, of some of the winners that could benefit from all of this and that have recently lagged a little bit. So think, for example, materials in Europe, but at the same time, certain industrial plays that, in our view, should benefit from this potentially positive momentum in China, as many people seem to be throwing in the towel.
Maximilian, any opportunities actually in the UK right now?
Look, we always have to remember the FTSE 100 is not the UK economy. And in fact, actually, when you're looking at the FTSE 100, it is already trading very cheap, close to record discount versus global markets, highest dividend yield of any major region out there, and pretty well covered. And it's also got a fairly defensive tilt. So if one was to think that we could be seeing choppier markets ahead, this low beta market could actually do fairly well. And one of the things that we could also be seeing very near term is a potentially somewhat weaker pound if concerns around the economy start to reignite. That would again be beneficiary, of course, to the FTSE 100, given more than 70% of revenues come from abroad. So I think the important thing, first of all, is to think that this is not an area that we would go underweight on, and it's probably one where you'd rather, in the UK, prefer large caps to small caps, given concerns around the economic developments in the very near term. But the broader picture is one where this is not an underweight.
Maximilian, is there something over there or over in the markets that actually looks priced to perfection to a point where you don't want to be involved because it's an actual bubble?
Well, obviously, we have to be talking about AI here. And it's clear, in the very short term, this is simply speculative to bet on a particular move of the main beneficiaries of AI. Longer term, we think this technology is transformative. But I think in the very near term, especially if one was going to have concerns around momentum continuing at a time when there are concerns around Fed being higher for longer, et cetera, I think you want to be looking at other areas. I wouldn't say it's a bubble yet, though. I don't think it's a bubble yet. But clearly, risk-reward at this point would rather point towards other areas, as we said, be it emerging markets, or be it areas such as consumer staples or industrials, or even utilities.
Maximilian, thank you so much. Maximilian Kunkel there from UBS Global Wealth Management. Now, we're live at the Paris show next. This is Bloomberg.
tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, the world's largest air show is back for the first time since before COVID. Much like previous years, well, the battle for the skies between Airbus and Boeing will be center stage. And our very own Guy Johnson joins us now from the Paris Air Show. Guy.
Francine, thank you very much indeed. Yeah, welcome back to the Paris Air Show as ever. The battle between Boeing and Airbus, as you say, Francine, front and centre. But it was interesting coming into the show. We've seen a whole raft of orders. Boeing getting orders from a whole range of airlines, including Ryanair. A huge order coming through from Michael O'Leary. So maybe the battle's started a few weeks back, a few days back, certainly. So let's talk about where we are. There's a lot of things going on. Stan Deal is the right person to ask those questions to. He is the CEO of Boeing Commercial Aeroplanes. He is the lead figure for Boeing here at the show. This is your hunting ground. It is going to be a busy show. How busy is it going to be? I just got back from IATA. The airlines there, I have never seen more excited airline CEOs.
Totally agree with you, Guy. It's probably the busiest I've seen the industry post an exogenous shock like COVID. And I think you're going to see orders, but you also see the robustness around the discussion in the supply chain. There's a lot of people here trying to convince Boeing that they have a better idea in terms of how to source and prepare parts. So that's going to be part of the discussion. And then investors are looking here as well.
Yep. Is there a danger airlines are over-ordering? As you say, there seems to be a kind of a bit of exuberance around at the moment.
Well, it's definitely a supply-constrained market. From our perspective, we're trying to bring rates up responsibly. That puts a little pressure on the airlines to get into the order books. No, I don't think so. I think as you look at our order books, they're extending from now all the way out into the 2030s. Yep. So it's a nice level ordering through that stream. The economic indicators we look at, yep. And we published our market outlook report, 42,600 airplanes over the next 20 years would say, no, they're not over-ordering.
How you've got a huge order book. And narrow bodies are pretty much sold out. You're looking at a situation where wide bodies are going in the same direction. How do you price this far in advance when inflation is as volatile as it is right now?
Sure. Well, first you work productivity to try to offset your costs as much as you can on escalation. Yeah. You know, it's a competitive market. We have to convince our customers the value of our airplane first and foremost. We think that's what the product lineup of Boeing brings. Fuel burn in double-digit terms in terms of benefit. Yep. But our competition's fierce out there. So we do our best to convince our customers. Great value with Boeing. The price should follow. And then the competition's on.
Why is this industry
struggling so much with supply chain? Why is this industry struggling so much with labor? Other industries, they've got it licked. They fixed the problems. Why is aerospace still dealing with this?
Much longer cycle industry than others. You know, you think of our supply chain going all the way back to raw material, which is 4 to 5 years out in the depth of the supply chain. So labor being the biggest contributing factor. We went through COVID. A lot of labor moved out of this industry. We're bringing it back. And then we're focused on the training and the skilling of that labor coming in.
Is the lesson learned, don't lay people off during a downturn?
Well, the hindsight there would say
Hindsight capital is great. But
absolutely, it would say that. You know, but each exogenous shock is unique. It's tempered me on how I approach labor on the forward-looking view. I think we're going to be a little more conservative on that. But each crisis, you got to stare into and decide, how do you manage this company moving forward?
as you say, the supply chain's coming back. I understand you're talking about the fact that you're going to take the 737 line up to 38. When is that going to happen?
Look, soon. I'm not going to give you an exact date, but it's
this year.
It's absolutely within the year, and we're very near that moment.
What's the next milestone
we're running
after
at 31. We're about to go to 38, and then we'll look at a break in the 42 before the end of the year.
Before the end of the year, you think you'll be at 42?
Yes.
Okay. Let's talk about what else is going on. You've got a 767 program that is going to struggle with ICAO regulations, the emission regulations that's coming up. You've applied for an exemption on that. Does that mean I'm not going to see a 787 freighter anytime soon?
Look, I think the 767 today on the environmental front does a great job in terms of per ton delivering the right emission answer. In the future, we'll look at other variants. The 787's the next natural act because it's got the right size, it's got the right
If you don't get the ICAO exemption, do you go straight for it?
Well, look, we're looking at it, but right now we're very focused on the 67 as the next solution.
Let's talk a little bit about kind of what comes next. This is an industry that is going to be supply constrained for a while by the looks of things. Is that something that you are going to use to your advantage? It was really interesting. The car industry during the downturn learned that it could make fewer cars and make more money. Does that apply to the aerospace industry as well?
Well, I think what we look at is, you know, what the long-term demand needs to be, and then we have to factor in what can the supply chain do. We've always tried to be conservative in terms of net output, not to overproduce to the market. We know that is bad for pricing. And we're going to be responsible on responding to demand. And it's got to be done within the capabilities of the supply chain. So I think it's the long and short. We want to try to run right at demand or slightly under as a Boeing company. Never overproduce, keep the financial viability of the assets there for the airline and those who invest in these assets.
Am I going to see a big order today? Am I going to see a big order tomorrow? Am I going to see a big order this
I think
week?
you'll see orders at the air show, Guy.
Boeing orders?
Boeing orders.
Big Boeing orders?
We're going to see some nice orders. Just remember, this is a 4-day show. We have 364 days in a year. It's only 4 days, so every day is an order day for us.
We like it when they all come together. Stan Deal, it's fantastic to see you as ever. Thank you very much indeed for dropping by to see us here at Bloomberg. Francine, from the Paris Air Show, back to you.
Yeah, pretty optimistic Boeing Executive Vice President there with our very own Guy Johnson. We'll have plenty more from the air show. We'll also have a full roundup of the markets. This is Bloomberg.
crucially important. And I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, turning to banks, and UBS Chief Executive Sergio Ermotti has hinted at massive cuts to Credit Suisse's investment banking division. Writing in a Swiss newspaper, he says UBS went through similar steps early on during his previous tenure at the bank. Now, SVB Financial Group has also agreed to sell its investment banking business, SVB Securities, to a management team group led by the Chief Executive Officer of SVB Securities. And finally, Barclays has ramped up lending to hedge funds and rich investors in Asia. The move is part of a global plan to expand its markets franchise as rivals have scaled back. The other story we're watching out for is the ECB said to tell banks to brace for harsher stress test results. And then when you look at markets overall, we're seeing a little bit of pressure. A reminder, it is Juneteenth in the U.S., and so markets are closed. This is Bloomberg.
Top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to
vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
China's top diplomat Wang Yi tells U.S. Secretary of State Antony Blinken his visit to Beijing comes at a critical time in the two countries' relations. Blinken is set to meet President Xi this hour. Goldman Sachs becomes the latest bank to cut its forecast for China's economy, slashing its GDP growth projections for this year from 6% to 5.4%. And Boeing forecasts an $8 trillion decade for the aviation sector, despite economic headwinds. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bloomberg understands that European regulators are warning banks to brace for harsher stress test results. Sources say lenders that have benefited from higher interest rates need to prepare for adjustments in order to achieve more credible results. Well, Bloomberg's European finance reporter Nick Comfort now joins us. Nick, good morning. So tell us a little bit more about what the ECB is said to have told banks.
Well, the banks really sailed through the early rounds of this stress test. They benefited from a high level of net interest income. That's the difference between what they pay on deposits and what they earn on loans, which really was boosted last year by the rising rates. Also, sweet spot, very few insolvencies, so the loan book wasn't hit too hard. And then the stress test kind of assumes, too much in the view of some regulators, that this kind of continues. And so the banks were doing really well on this stress test. Now, as we understand, the ECB has told banks to kind of calm their expectations there, that there will be a very strong challenge to these results as part of the stress test, and that just because they sailed through really well does not mean that the results will be as rosy as they had hoped.
So, Nick, what does this mean for bank dividends?
Yeah, so these stress tests are key for determining how much excess capital the banks have. Now, I mean, it's gonna, so in some cases it may sort of reduce that amount if they have a harsh stress test result. But generally speaking, we're still expecting the banks to go through the stress test quite well. And furthermore, a lot of the banks have a lot of excess capital. So even if the regulators don't really like the fact that banks are paying out billions of euros in dividends and share buybacks, they still have a lot of funds, and we would still expect to see a lot of payouts in the months and the years ahead.
Nick, thanks so much. Nicholas Comfort there, a Bloomberg European finance reporter in Frankfurt. Now, the IMF Managing Director, Kristalina Georgieva, spoke to Maria Tadeo after the ECB decision last week. And this is what she told us about growth and inflation.
Some further tightening would be necessary to bring inflation firmly under control. And let me say why this is so important. Because if inflation continues to run high, one, that means interest rates have to stay higher for longer. When they're higher for longer, financial vulnerabilities could get exposed.
Coming up, Bank of England decision and CPI data to come from the UK this week, so we discuss what to expect from the UK next. This is Bloomberg. you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Ibiza, Innsbruck and Cannes, luxury destinations for Amsterdam's well-heeled jet set. Perhaps, though, not for long. Schiphol Airport has announced plans to ban private jets from its runways by 2026, setting a huge precedent for other travel hubs and generating plenty of controversy. As many as 17,000 private jets crossed Schiphol's runways last year, and the airport argues they're noisier and generate 20 times more carbon emissions per passenger than commercial flights. The plan was announced a few months after climate activists stormed Schiphol's tarmac to block private jets, and comes on top of the Dutch government's proposal to cap the total number of flights to and from the airport.
Every sector needs perspective. Perspective of the residents, of the people you work for the airlines, and for Schiphol itself.
The private jet industry says the unexpected ban will hit business travel the hardest.
Private aviation is a business tool, especially for Amsterdam, where the top 3 destinations are London, Switzerland, and France. So they're not really let's say, beach destinations and holiday destinations.
For now, the fate of Amsterdam's private jets remains unclear. The question now is, could the move accelerate the development of more sustainable alternatives?
Bloomberg's Guy Johnson there on one of Europe's busiest airports plans to ban private jets. And don't miss all of our coverage and big interviews from the Paris Air Show. We'll be speaking to a slew of business leaders, including the Riyadh Air Chief Executive Tony Douglas, the Dassault Aviation Chief Executive Eric Trappier, and the Airbus Chief Executive Guillaume Faury. So stay with Bloomberg TV as we bring you all of these important conversations today and tomorrow. Now, the U.S. Transportation Secretary says he wants to de-risk global supply chains. Pete Buttigieg spoke exclusively to Haslund Amin on the sidelines of a G7 meeting in Japan. And she began by asking him about the challenges posed by China's ownership of international container ports.
As we seek to de-risk and diversify our supply chains and our economic relationships, we do want to make sure that these capabilities are not concentrated with any one country. Certainly with a country that may demonstrate a willingness to use these in ways that are not connected to what is the best going forward, either commercially or in terms of that rules-based international order. We want to make sure that at least when we can agree on matters from climate change to public health, that we're operating on a basis that can be understood to be for the benefit of all. Those are the kinds of things we're focused on here at the G7.
You talk about de-risking. Are there any other sectors that need de-risking? Some point to perhaps even the drug sector in China. I mean, the world is reliant on basic drugs when it comes to, China.
Well, I want to make sure not to wander too far outside of my own portfolio. I know that these are subjects of active conversation, both bilaterally and multilaterally. What I can say with regard to supply chains is that we have seen how if there is not enough diversification, you see extraordinary levels of geopolitical risk or even just logistical risk, in the U.S. Because of the extreme variation between the closures and the reopenings in Asia and in China specifically. There's a great deal of unevenness in terms of the arrival of goods that our ports were not ready to take in all at once. I think that's one example of the kind of wake-up calls that the U.S. and that the global community in general have been experiencing, especially in the last 2 to 3 years.
Since we're talking about supply chains, of course, semiconductors front and center. We've had the Chip 4, US, Japan, Korea, Taiwan, investing heavily in their own respective semiconductor sectors. Could that lead to overcapacity? What's your assessment? How are you looking at it?
Well, right now, overcapacity seems to be the least of our problems when it comes to the race for semiconductors, and we saw how problematic it was when we came up short. Of course, this is a process where the very intentional, direct, and ambitious use of public policy has to match the unique ability of markets to allocate resources and to help make sure that the capacity is tracking the future of demand. But what we know is that semiconductors are going to be even more important in the future. We think about the automotive sector, for example, and the fact that a car is increasingly as much a computer as it is a vehicle. And the same could be said of so many other sectors. So rather than allow ourselves to, again, be in a situation where we're coming up short, we're making sure that both in terms of our relationships with friends and trading partners and in terms of our domestic capacity, which, by the way, has also benefited from foreign direct investment that's really helping to create jobs on U.S. soil while strengthening our partnerships and relationships across the Pacific. That is something that makes sense for the future and can help us to cushion some of the geopolitical risk.
Boeing looking to resume its deliveries of the MAX jets to China. Is there a sense when that might be happening? How are you trying to push this along with the Chinese government?
Well, our focus from the FAA's standpoint and the U.S. Department of Transportation is simply on the certification and safety. The rest is a market matter, one that obviously there's a lot of interest from a trade perspective, but we're very cautious in our administration, certainly in my department, to separate trade questions from safety questions, and the safety questions are our top focus.
You talked about EVs, the big boys, the likes of GM, Ford. They've come forward to say that, they're ready to adopt Tesla's superchargers. How do you look at that? Will that perhaps, make it even more difficult for your department to have oversight over Tesla's autopilot?
We view the relationship that's been established in terms of chargers as a positive development. Our biggest concern is simply to make sure that a good, strong charging network is available. In other words, as a U.S. government, we're not out to pick winners and losers and say that this company or this company's standard is better than the others. We did establish a baseline in terms of access to a certain connector to make sure that everybody knew what to expect, but that was designed to be a floor and not a ceiling.
Well, that was the UK Transportation Secretary Pete Buttigieg speaking exclusively to our Haslin Amin. Now, a big week for UK watchers. Inflation data on Wednesday, a Bank of England rate decision on Thursday. Now, the two events will have important consequences, of course, for many mortgage holders. Bloomberg's John Stepek joins us now with the very latest. First of all, John, congratulations. I love reading your stuff. It's often controversial. What's your most controversial call for the UK? There's many.
Well, it started off being there wasn't going to be a recession at this time last year, and everyone was saying there would be a recession.
Yeah, and then you were right.
And I was right. The scary thing, the slightly worrying thing now is that if rates do keep going up, then maybe there will eventually be a recession. But if I'm honest, I think that at the moment markets are a bit pricing in too many interest rate hikes.
Okay.
I think that's probably the most controversial view at the moment.
Which is funny because you think it's the other way around for the Fed, right? So is there like a bias of negativity towards the UK or on inflation because everybody thinks it's so much worse?
Well, yeah, partly. I mean, the Fed has been able to do they call it, kind of like, a hawkish pause.
Yeah.
Where they've said, okay, we're going to skip this one, but we are still going to do 2 more hikes before the end of the year. Whereas in the UK now, we're pricing in, another 4 hikes 4 quarter-point hikes by the end of the year, and a kind of 50-50 chance of going up to 6%. That seems excessive, and I think that's mostly driven by a sense that, as you say, inflation has kind of, taken off in the UK. And the thing is, I think that the Bank of England almost, this particular inflation reading this week could be sticky because it's not going to, the inflation rate won't drop by much. But that's partly because of the way that we've done the energy price cap in the UK. So the next significant drop in the percentage rate of inflation will probably come in the July reading, because that's when the energy price cap changes again. We won't get that inflation reading until August.
Right.
So the Bank of England, if it is clever and it couches its language in the right way, could get away with what I've called a dovish hike this week, where they put rates up by a quarter point, but they sort of start to talk the market down a tiny bit and maybe say, well, look, if we put rates... Sorry, you go.
John, is this kind of like an inflection point then? They have to get it right this time for basically, and that has huge repercussions for bonds and traders.
Yeah, and it is massive. I think there's a lot of bond traders think that the market's priced in too many hikes as well. My colleague Philip Aldrich was writing about this morning, and basically, there's a lot of bond buyers of gilts just now because they think, well, this is a good opportunity to lock in high yields, because the market is over-exaggerating the number of rate hikes that are going to come. But if the Wednesday inflation data is particularly bad, and it has surprised to the upside a lot.
A lot.
It's been a long time since we had a surprise to the downside or even expectations. So it's going to make it difficult for the bank.
And John, and what's difficult here in the UK is, of course, mortgages, right? And the fact that the economy and so many people rely on mortgages that roll over about a third every year. Like, how ugly could that be for consumers?
The problem is, the Resolution Foundation, which is a think tank, said roughly £3,000 or £3,600 extra a year for the average mortgage by the end of 2024. Now, obviously, that's a lot of money. There are ways to address that. Banks can extend the period. If you're fixing your mortgage again, then obviously if you're refinancing, it means that you've got some time left on your loan, so you could extend it for a few years. It means you pay more interest, but it also means that your monthly rate won't go up by as much. So there's ways for individual consumers to survive that. But there's no doubt that it knocks purchasing power out of the broader economy. And the risk, obviously, then is that if you've got 1.3 million people trying to find an extra $3,500 a year, it's got to come from somewhere. And that then, lowers demand in the rest of the economy, and you've got the risk of a kind of downward spiral.
Right. So we talk about a credit crunch, but actually, is spending quite precarious here in the UK, or do we still have pent-up savings from COVID?
Well, I think those are starting to come to the end of their tether. People still seem to be happy enough to spend. I think that the major issue is probably jobs. Because, the other good thing, people complain about wages going up. Policymakers complain about wages going up. But if wages keep rising at the rate that they're rising at the moment, and inflation does come down, you're going to get a point this year where real wages are actually rising. And to be fair, that can take the sting out of rising mortgage rates as well. You get inflation, wages is at 7% now. So, there's more cushion there, perhaps, than people think. But the Bank of England, if it can find the excuse to do so, I would suspect we'd want to hold off raising rates again after this week until at least they see what happens in September.
John, thank you so much. John Stepek there with all of the insight. He also has a great newsletter. Check out everything and a podcast. John Stepek. We're also getting some breaking news out of Xi and Blinken. Now, we heard from President Xi. Of course, this is a huge deal. By the way, Anthony Blinken, the Secretary of State, is the first U.S. official in 5 years to go up or to go to China. And we know that he has, of course, met with President Xi. This is according to CGTN, saying that Xi has told Blinken that China has made its position very clear. President Xi has also told Blinken that his visit could help stabilize U.S.-China ties, so that could help with positive contributions. We'll also see whether we're briefed and updated on the U.S. side. For the moment, this is all, of course, on the Chinese side through CGTN. And we'll have plenty more on that throughout the day as we have more news coming out, and also a warning about the rising threat of a global credit crunch. So we'll have more details on that next, and this is Bloomberg.
on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the pension upheaval in the UK last year and more recent US regional bank stress may be just the beginning of rolling crises that end up in a global credit crunch. At least that's the warning from Janus Henderson Group. It says the two episodes in a world of elevated interest rates may lead to constrained credit, increasing defaults, and squeezed corporate profits. Now, let's bring in our markets today. Managing Editor Christine Aquino. Christine, thank you so much for joining us. I mean, look, credit is often the canary in the coal mine, especially before a recession. What do the figures now tell us?
Well, Francine, several canaries are starting to sing in the coal mine, it seems like. I mean, I think really the danger zones within the credit space are really a lot of debt tied to commercial real estate. That's been a sector that's really been struggling, and I think this is related to, of course, higher rates taking their toll on company mortgages. We've seen a number of companies defaulting in some of their mortgages already on some of buildings that are used for commercial purposes, and that's only the beginning of that, right? And then, of course, the other side of this as well, that's kind of the danger zone, is what's happening in a junk bond market. We're seeing company costs when it comes to issuing debt really rising in earnest. We've seen more than $11 billion of investment-grade bonds downgraded to junk status just in the first quarter of 2023 alone. So several warning signs already flashing red here.
Yeah, how much should we worry about bankruptcies overall?
Well, Francine, I mean, definitely on the radar, because that's usually kind of the next phase when it comes to a credit crunch, right? Companies not having access to credit, not being able to borrow money to keep their businesses going, and then that's when we start seeing the rise of bankruptcies. I think by one measure, we've seen more bankruptcies now than at any other time since 2009. And so if we do see a wave of company closures, especially big companies, then that is potentially how the credit crunch turns into a job crunch, right? Because that's when you see kind of mass layoffs in different industries. And so if this becomes a widespread thing, this is how kind of what's happening in the credit space spills over into the broader economy.
So how has that influenced also what the Fed did with that hawkish pause?
Well, Francine, I mean, we have seen the Fed kind of acknowledge what we've seen, for instance, in March during the banking turmoil. That was something that they definitely acknowledged as a worry, even though they did keep raising rates for a while and didn't really pause until this month. But I think, if we see more episodes of really acute stress events, and I think also the key here would be speed. If we have something that's a credit event that really escalates very, very quickly and becomes more widespread in just a short space of time, that's something that would really, I think, get the Fed to reconsider, okay, is this pause really going to turn into, let's just end the rate hiking cycle now and perhaps even consider rate cuts? But we're not there yet, but you never know. know.
But we could be. UK mortgage rates actually hitting 6% for the first time this year. I mean, this means fresh pain, and it could also have an impact on how consumers are spending.
Absolutely, Francine. I mean, we all know the mortgage market definitely having difficulties this year is one of the things that's really keeping Brits very, very worried in terms of their being able to afford their mortgages, how much their mortgages cost, or, you know, first-time home buyers trying to get into the property ladder. And so 6% mortgages, I mean, that's something that we've really not seen in the last decade or so. I mean, that's really going to hurt affordability benchmarks, and anyone who's been trying to get a house, I think that just became a lot more difficult for them now.
Thank you so much, our Christina Kino there with the very latest, of course, on some of these markets. We're also getting some breaking news out of Xi and Blinken. They're still meeting, as far as we understand, according to some of the Chinese media, including CGTN. President Xi has told Blinken that China has made its position very clear, and that the visit, though, could help stabilize some of these ties. We'll have plenty more from that throughout the day. This is what else we have coming up today and the rest of the week. We have the Bank of England a little bit later on this week. That's on Thursday. Ahead of that, on Wednesday, we have some CPI inflation forecasts. And then we look at the markets overall, as there was quite a lot expected in terms of stimulus for China. That hasn't come yet, and so we're seeing a bit of pressure across the board for some of these stocks today. A reminder also, it is Juneteenth in the U.S., so markets are closed. Bloomberg continues with Youssef Gamaeldin in Dubai. This is Bloomberg.
City, a $100,000 salary feels like just $36,000. That's according to a new study that looks at 76 of the largest U.S. cities to see where $100,000 goes the furthest, after taxes and after accounting for the cost of living. For many, reaching a six-figure salary is a huge moment when you feel like you finally made it. But that feeling may not last long when you realize just how much taxes and the cost of living in an expensive city takes out of your paycheck. And that's especially true after 2 years of inflation. Hybrid and remote work have opened up so many more opportunities for people to choose where they live. So that forces the question, should I stick it out in an expensive city or try to find somewhere more affordable? So where should you live if you want to maximize your salary? Consider Memphis, Tennessee. The home of the Blues topped the list with a take-home pay of about $86,000. Tennessee doesn't have an income tax, and the cost of living there is about 14% cheaper than the national average. So a dollar there takes you much further. Texas is another popular choice, and it's clear why. 7 of the top 10 cities where $100,000 goes the furthest are in Texas, a state known for low taxes. Of course, there are so many factors that influence where you choose to live. You may want to be at the center of things, or be near family, or be somewhere where there are a lot of career opportunities in your field. It's not always just about dollars and cents.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion
per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg.
It's 10 a.m. in London and 5 a.m. in New York. U.S. markets are closed for a holiday. Here are our top stories this morning. Happening now, the U.S. Secretary of State Antony Blinken is meeting with his Chinese counterpart and the president as well, Xi Jinping in Beijing. A sign that tensions between the two countries may be easing. Intel will receive $11 billion in subsidies to build a chip factory in eastern Germany. The announcement is coming just a day after the company announced plans to build a $25 billion plant in Israel. And Credit Suisse may be due for a, quote, massive downsizing of its investment banking business after its takeover by UBS. That's according to the CEO, Sergio Ermotti. Welcome to Bloomberg Markets. I'm Yusuf Gameluddin in Dubai. Let's get straight to some of the action for you because European markets are starting off on the back foot. We're watching the geopolitics, but also the possibility of more stimulus out from China. Trading volumes likely to be muted because of Juneteenth's holiday in the United States. In terms of the geographic breakdown, it's still pretty much red across the board. On a sector level, looking at chemicals and construction, leading the declines, telcos outperforming. Among the biggest individual movers, Sartorius AG slumping 15%. Deutsche Bank out with a new note. They're seeing upside for European stocks because of better risk sentiment and lower pressure from rates. Let's flip the board, get to your euro-dollar trade here. We are at 109.28. The greenback coming off the worst week since January. German bonds open higher. We have a cascade of ECB speakers to look forward to today. U.S. equity futures barely below the flat line. Let's get to this important chart and reflect on one of the trades that was a top favorite because that trade is pushing bond investors to regroup. That is a steepener trade. That's being abandoned as the Fed projections signal more hikes. That shows a yield curve inversion that's approaching the pre-March turmoil levels. So this is the spread, 5s and 30s. This chart takes us back all the way to the turn of the century. The stakes couldn't be any higher. Quick look at the energy equation as well. Brent intraday, it really is all about the Chinese demand story. We are moving down somewhat, 0.6%. I want to get out to Bloomberg's Kristen Aquino, who joins us more for a closer look at what is driving some of these markets.
Hi there, Yusuf. Well, of course, we're looking at what we've seen out of China. Again, as you mentioned, a lot of anticipation over what the Chinese government could provide in terms of stimulus. So far, what we've seen in terms of market reaction, really not delivering. Investors have not been impressed. We've seen Chinese stocks on the back foot starting the week today, as are they in Europe. We've seen some pressure on the yuan as well. And so it really is coming to a head in terms of investor expectations when it comes to China and thinking about how that Chinese growth story will finally start delivering. Remember, at the start of this year, the expectation was really for China to kind of pick up the baton when it comes to growth, especially when we were seeing some signs of a slowdown in the U.S. That story really has not delivered. The recovery in China out of their COVID era and into this new kind of normal has been bumpy at best. And so now investors are looking to the government to kind of restart and recharge that economic recovery once again.
Christine, what kind of trading mechanisms could unleash new waves of liquidity into China assets, into Hong Kong assets? Because there was quite a bit of debate over the last few hours around this.
Well, Yusuf, I mean, I think it really will have to do in terms of investor sentiment. First and foremost, you know, our investors kind of feeling confident when it comes to putting more of their money into China and in Hong Kong shares for that matter. And then, of course, the ease of those trading channels as well will matter quite a bit into just this sort of a dynamic. But yeah, really, I think it is first and foremost a sentiment thing. You know, if investors are feeling confident that the Chinese growth story will finally start to deliver, that we are going to get once more support from the government, whether it's in the form of a stimulus directly or maybe indirectly via the central bank. I think that's really something that investors are waiting and watching for before they start kind of reloading that positive China bet.
Christine, fantastic reporting. Thank you for the insights. That's Bloomberg's Christine Aquino. I want to widen out the conversation and bring in Deirdre Cooper, 91 portfolio manager. She joins us now. Deirdre, you talk about a consumer-driven recession, and you don't think economic momentum is going to hold up. Run us through what's underpinning your thesis.
Well, it's really interesting, actually, just following on from what Christine was saying. We do see that consumer-driven recession starting in the US, in Europe. We see some early signs that particularly towards the end of this year and into next year, we're going to have a much slower economic growth environment. We see something quite different in China. We don't spend a lot of time actually monitoring sentiment. What we do look at is policy, and we look at underlying structural growth drivers. And when we look at China, we see a clear need for further policy intervention. You know, you look at things like youth unemployment rates, for example. It's going to be absolutely imperative for the leadership to address that. And because of that, we expect to see continued stimulus.
Here's something I'm wondering. I mean, I look at your research and you make the point that it is a good time to be a stock picker. If I would have hung out on the indexes, be it on the NASDAQ or even some of the European benchmarks, I would have done quite well. I mean, how do you explain that?
So I guess we're looking backwards rather than forwards. So certainly looking backwards, you know, you've had a market where performance was dominated by some of the large tech companies in particular, if you look over the last decade. As we look forward, you know, a very different interest rate environment, much weaker, as we said, potential economic growth. That's the environment where we expect companies with underlying structural drivers to really outperform. And we actually believe that those structural drivers, to a large extent, will be linked to some of those sustainability themes that we really focus on within my team. And those are things like regulatory drivers, so the move to tackle climate change, you know, policy measures like the Inflation Reduction Act, which runs for another 10 years. So will really help support company earnings. Those are, you know, sustainability, technological improvements, things like the pace of electric car development in China, and consumer preference changing to buy products that are more aligned with people's values.
Let me flesh that out in a bit more detail, Deirdre, because within the European energy equation, there are quite a few companies who would like to claim that, you know, they're running the ship, as it were. You like Schneider Electric, a stock that's seen upside of about 25% year to date. Why can this stock rally another 25, 50% in the next year?
So Schneider is a really great example of a company that was incredibly early in pruning its portfolio to have a business that was really well placed to address those structural growth trends. And the one that has impacted Schneider's business most in recent months, and will continue to do so as we move into the end of this year and next year, is the need for energy efficiency. So I think probably one of the biggest energy surprises of the last year was how Europe managed to survive last winter. So if we were sitting here last year, we would have said 35% of Europe's gas comes from Russia. That's just disappeared. You know, it's going to be a terrible winter. We're going to have to turn off the heating. And Europe has actually managed to survive that winter. Weather helped a little bit. It wasn't as cold as it could have been. But there's also been just massive gas demand reduction. And some of that's temporary, switching to other fuels, but quite a bit of it's permanent. It's investment in energy efficiency, and that's exactly what Schneider supplies. and that investment's going to continue. So we see Europe as very well placed for next winter, and companies like Schneider and Train Technologies and other companies we hold within our strategies are the solution providers for that, and are effectively telling, you know, telling Russia and its invasion of Ukraine that we can survive perfectly fine without you.
So some strong conviction views. We love it on this program. Deirdre Cooper, 91 portfolio manager. Thanks again for making it. Let's get you a bit of a snapshot of what else is still to come. We'll be hearing from George Magnus. He's the Oxford University China Center Research Associate. Sandra Horsfield, Investec senior economist, is going to weigh in on some Bank of England themes as we count down to quite a few events in the United Kingdom. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. The top names in business are on Bloomberg.
The energy in Shanghai was like New York on crack.
Things are going to get worse in the economy at the same time as you have this internal conflict.
We need more bipartisan conversations because this is an American issue.
Are some of these assets commodities or are they securities? And we've been asking the SEC for a long time.
But I think there's more problems under the surface.
It's incredibly exciting, as important as the birth of the internet.
Nobody covers business like Bloomberg, your global business authority.
I look at it at the other side of the coin. How expensive it would be if you didn't take these type of investments, leaving yourself vulnerable on a key piece of technology. Cost, yes, for that type of investment to modernize. Cost to leave you vulnerable. Which one do you want to use? It's not a just one-sided question about cost. So is it costly? Yes. It's also costly to leave yourself totally vulnerable to another power that has clearly shown their intent to use economic tools to subjugate you politically.
Rahm Emanuel, the U.S. ambassador to Japan, speaking with Bloomberg on the semiconductor industry. Let's get you the update then around the meeting between the U.S. Secretary of State Antony Blinken and the Chinese President Xi Jinping that is underway. Xi is saying that very good progress has been made on U.S.-China ties. That's the red headline that's crossing the terminal in the last 2 minutes. Bloomberg's Rosalind Madison joins us now for more. I mean, throughout the last few hours, there was a sense of sort of restraint from the Chinese side. This latest comment from the president himself raises the bar quite a bit, doesn't it?
Well, certainly it does, and it signals that this whole visit has been quite positive for putting a floor under a very, very tense relationship. We saw marathon talks yesterday between Antony Blinken and China's foreign minister, more than 7 hours of discussion. This morning he met with the top Chinese envoy, Wang Yi, and now, of course, this brief meeting with the Chinese president caps that off. And that would only have happened, that final big meeting, if the trajectory had been seen as positive through his visit. And really what they're both signaling is a desire on the part of both the US and China to stop ties getting worse than they are. They've been very, very tense for quite some months, certainly under the entirety of Joe Biden's administration, tensions around trade, business, security, you name it, and at least an overarching sense that right now they need to stop things getting worse. And obviously those discussions have been fruitful in that regard. It was telling, though, that Xi Jinping also made the comment that the relationship has to be based on mutual respect. Yes, things are, had a good meeting, of course, with Antony Blinken, but the desire from China to be seen as an equal partner with the US, and that's very much a telling comment from the Chinese president also.
In global political debates, we often speculate about what an off-ramp could look like. Where would you say is the starting point for an off-ramp in a tense US-China linkage?
Well, the starting point for an off-ramp is for the two presidents to perhaps meet in person and sit down later this year. And we're seeing signs that might happen either at the Group of 20 summit in India or the APEC summit the US is hosting, or perhaps even at both. And all of this is designed to pave the way for those two presidents to have a proper meeting and kind of clear the air, really. But in terms of an off-ramp, it's about stopping things from getting worse. It's not really about a fundamental long-term reset in a relationship between the world's two biggest economies. Fundamentally, there are too many friction points between them where you see competition, again, in the economic space, the business space, the tech space, the cyber space, the military space. It's simply an off-ramp is to stop a deterioration from here, and that's really what they're trying to achieve on the ground in China today.
This has been super helpful. Thank you very much for the insights. That's Bloomberg's Rosalind Madison there. I want to get another view. George Magnus, the research associate at Oxford University China Center, joins us now for more. Magnus, your initial take then on the red headline, on the, quote, very good progress that has allegedly been made.
Yeah, it's encouraging that Antony Blinken's visit has, produced this kind of attitude from his Chinese hosts. Wang Yi, who's China's top diplomat, was kind of a little bit less generous in his comments when when we read the readout of their marathon meeting. He accused the Americans of basically being to blame for everything, erroneous misunderstanding of China. America must reflect deeply, return to objectivity and rationality, and so on. But I think, as your correspondent said, I think for Xi Jinping, there are some important issues here. I mean, you can call it an off-ramp, but basically, the economy in China is not in great shape. He wants to appeal and be seen to be constructive to global South partners. And there are important things coming up. The 4-yearly review of Section 301 tariffs in the U.S. Congress.
Yeah, I mean, I was gonna follow up on that, George. The S301, which you mentioned in your research. What are the likely scenarios on that front? How could this take shape?
Well, I mean, there is always room for compromise. It just depends on, how much goodwill there is. I mean, if you think that probably about 2/3 of American trade with China is really not that contentious. It's in goods and services, which don't really enter into the whole kind of national security, even the kind of wider national security spectrum. So, not all of the tariffs that were imposed under the Trump administration need to be kept in place for America's interests to be served. And you could argue that actually tariffs are the least potent weapon which the United States administration can deploy. So there's scope for compromise there if the United States administration wants to. But it's equally important that obviously that the red lines that it believes are important over Taiwan, human rights, technology, et cetera, these things, these are things pretty firm.
George, do you necessarily believe in a zero-sum game here where any improvement in U.S.-China ties needs to come at the expense of China-Russia ties?
Well, I don't think there's much room for compromise there at the moment. I mean, it's really important from Xi Jinping's and China's point of view that Russia not be, humiliated, or that, in the event that the Ukrainians should have, astounding military success. Also that, they certainly do not want instability and political turmoil in Russia in the event that Putin should, something should happen to him, or should be deposed, or anything like that. So I think China will stand by Russia, regardless, until such time as it looks like, there are genuine reasons to talk peace. And so somebody, obviously, both sides have to want to get brought to the table. But I think China's going to play it pretty tough with Russia. Yeah.
At the same time, there's a delegation from China in Germany, and you begin to speculate as to whether these efforts to try and move Germany away from the United States are going to bear any fruit. Is that even a realistic scenario?
Well, it's definitely what the objective, I think, of the mission. It's the Premier Li Xiang with at least 7 or 8 or 9 other senior officials coming to Berlin. And yeah, I mean, they want to talk about kind of ways in which they might kind of lever Germany away from the kind of transatlantic alliance, in the same way that they might have thought that Macron had been kind of maneuvered that way as well. I mean, I think the Germans have a different agenda. They want to talk about climate change. They want to talk about accelerating renewables. They want to talk about, a healthy environment for German businesses in China. And the Chinese have different things to talk about. They want to talk about Huawei and ZTE, which are now on the list of the Commission to ban them in the EU, and they want to talk about all sorts of other things which may be less sensitive. Yeah.
George, great to catch up on an important day like today. George Magnus, he's the research associate at Oxford University China Center. Well, here's what's coming up. Let's get you a snapshot then of what's around the corner. The world's largest air show returns to Paris, and another airport is on a quest to ban private jets. The implications for celebrities and business executives. Next, this is Bloomberg.
Covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly with just a couple people. Our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Markets. I'm Yusuf Gamaluddin in Dubai. Let's talk about the world's largest aviation showcase, because that is returning. Plane makers are gathering at the Paris Air Show to announce new deals, new innovations in a post-pandemic world. But despite the return of global travel, one airport is on a quest to ban private jets. Bloomberg's Guy Johnson reports.
Ibiza, Innsbruck, and Cannes, luxury destinations for Amsterdam's well-heeled jet set. Perhaps, though, not for long. Schiphol Airport has announced plans to ban private jets from its runways by 2026, setting a huge precedent for other travel hubs and generating plenty of controversy. As many as 17,000 private jets crossed Schiphol's runways last year, and the airport argues they're noisier and generate 20 times more carbon emissions per passenger than commercial flights. The plan was announced a few months after climate activists stormed Schiphol's tarmac to block private jets, and comes on top of the Dutch government's proposal to cap the total number of flights to and from the airport.
Every sector needs perspective. Perspective of the residents, of the people you work for the airlines, and for Schiphol itself.
The private jet industry says the unexpected ban will hit business travel the hardest.
Private aviation is a business tool, especially for Amsterdam, where the top 3 destinations are London, Switzerland, and France. So they're not really let's say, beach destinations and holiday destinations.
For now, the fate of Amsterdam's private jets remains unclear. The question now is, could the move accelerate the development of more sustainable alternatives?
That was Bloomberg's Guy Johnson there in the slipstream of global aviation patterns. For more on the Paris Air Show, subscribe to the official Bloomberg Paris newsletter. Much more ahead. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not
experience with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
This is Bloomberg Markets. I'm Yusuf Gameneddin in Dubai. Here's what you need to know. Happening now, the U.S. Secretary of State Antony Blinken met with the Chinese President Xi Jinping in Beijing. The meeting ended 21 minutes ago, but it's a sign that tensions between the two countries may be easing. A tough week ahead for UK Prime Minister Rishi Sunak. A parliamentary vote on his predecessor Boris Johnson today, and a likely Bank of England rate hike on Thursday. And Credit Suisse may be due for a, quote, massive downsizing of its investment banking business after its takeover by UBS. That's according to the CEO, Sergio Ermotti. Welcome to Bloomberg Markets. I'm Yusuf Gameneddin in Dubai. Let's get you a check of where we stand in terms of risk appetite. Juneteenth holiday in the United States means volumes are lighter than on your usual Monday. This is a geographic breakdown. We're lower across the board, with investors weighing the possibility of more stimulus from China. The chemicals and construction sectors leading the declines in Europe. Telco stocks outperforming. Deutsche Bank out with a new note saying they see further gains in European stocks because of better risk sentiment and lower pressure from rates. I want to get to this board here, get you a sense of the other asset classes, including Eurodollar, where the greenback is coming off the worst week since January. We're off by 0.1%. German 10-year yields at 2.492, and then the S&P 500 mini just around the flat line there as we continue to monitor the geopolitical lines coming through from the U.S.-China summit over the last few hours. Let's get to an important corporate story, because Intel is announcing plans to expand in Germany and Israel. Bloomberg's Aggie Cantrell joins us now for more. So, Aggie, we came out with quite a bit of momentum from the weekend. They had a massive deal with Israel. Now they're building on that in terms of moving production out of Asia.
Yes, so essentially this deal with Israel, and also there's new subsidies coming out of Germany today, this is all part of an effort on Intel's part to diversify their supply chain away from East Asia, to diversify their production, move more of their production to places like Europe and to the US and to Israel as well. And on top of that, it coincides with an effort on the part of many governments around the world to also onshore a lot of the chip production that they're doing at home. So, for instance, where I'm sitting in Berlin, the EU is really committed to stepping up chip production that happens inside Europe, and these subsidies are part of that, these subsidies for this factory in Magdeburg that we heard about today.
There's a track record of Germany of promising subsidies, and then when it comes to the execution and delivering part, it takes either a very long time or it gets shelved. How's the tone different this time around from what you can tell so far?
Something that's really clear with the subsidies this time around is that this is also part of a broader European push. This isn't just Germany going alone. We've seen also Intel commit to a factory in Wrocław in Poland as well recently. And also these chip subsidies aren't just about the Germany's efforts. It's about the EU as a whole trying to step up to commit to building 20% of the world's semiconductors in Europe by the year 2030. Currently, they're at 10%. So they need a lot of money and they need a lot of political will across the bloc to commit to that. And also these subsidies have been stepped up. The original agreement when this Magdeburg plant was originally planned was 6.8 billion. Now we're seeing 10 billion euros on the table for Intel. And that shows the real commitment from Germany's side. This has been a long back and forth for months now before we've come to this agreement today in Berlin.
Aggie, well done. I really appreciate you scrambling in the light of breaking news. That's Bloomberg's Aggie Cantrill there. Let's get out to Sandra Horsfield, Investec senior economist. She joins us now for more. Sandra, I'm seeing this commitment around investment in capital expenditures and basically trying to ramp up the European semiconductor story. What would be an investment theme around that you could tell clients to position around?
Certainly, this sort of story of trying to diversify supply chains to onshore rather than offshore has been a key theme. And of course, part of that is the response to the experience during COVID, where it has been much harder to get hold of components. Part of that has something to do with geopolitical risks and tensions around that and trying to mitigate the risks that come from that. So all of that means, I guess, more investment that has to take place even though interest rates are very high. So it's a slightly unusual type of investment that has to take place regardless at this point.
Sandra, away from sort of what Intel is going to do, I want to lean into your bread and butter, which is around monetary policy, around economic growth. And let's zero in on the Bank of England, because that's where the bond market moves are showing signs of nervousness. It's a bit of an understatement. What is your top line thought on this front this morning?
I think for the Bank of England, clearly nervousness has been building. The question isn't so much, is inflation coming down? We're pretty confident we are getting inflation to come down. The question is how quickly and how far will inflation fall? And there, the news hasn't been good for the Bank of England. The labour market data really contributed to this nervousness in market last time around, showing still very strong dynamics in terms of wage growth, but also in terms of activity in the labour market. So pushing for more tightening will have to be necessary, and hence rate cuts seems pretty much on the cards no matter what at the meeting this time round.
I was looking at a tweet from Mohamed Alarian who says on the Bank of England, lots of views on the size of hikes, one of the trickiest sets of policy challenges. How are they going to get the tone around guidance right?
I think guidance will be very important here. Markets have really gotten ahead of themselves and priced in a lot further rate hikes this time round. There's now a mix of expectations in the market. Some are even thinking we could get a 50 basis point rate hike this time round. Our baseline view, and that of economists in general, is that we'll just get 25. But at the same time, the Bank of England will have little choice but to signal that they will take the flight to inflation, and if it's necessary, they will have to go further in raising rates. Clearly, they don't want to go too far, though. We know the pain that higher interest rates are inflicting on mortgage holders, on rental tenants as well, because of the impact this has in terms of the cost base. And also, we're seeing it in other asset classes, commercial real estate.
I mean, when I was looking through the CFTC data, what stood out to me is that leveraged punters basically cut back on some of their sterling longs. Does that open the path up for an actual breach of 130? What are your thoughts on the currency?
On the currency, we are of the view that sterling has been undervalued for some time, and some of the risks in terms of political instability, etc., have receded. At the big picture, though, is one that we've had of dollar strength. And the dollar strength side of things is starting to recede. We've seen the Fed already pausing its rate hikes. Again, it's not clear for how long, but they're clearly more certain that they're nearer the top of the tightening cycle. In the case of the UK, that's a bit less clear. So hence, there's some upside for sterling from here as well.
The other thing to look out for, Sandra, is the cascade of ECB speakers that are on the list for making appearances over the next few hours. Where do you see the European growth position, given the lackluster data of the last 2 weeks, and how is the ECB going to respond come fall?
The The European story has been somewhat more mixed. I think it's quite easy to get hung up on stories that say the Eurozone is in recession, and that's true in a technical sense. It's the mildest recession you could possibly have, considering the size of the increase in energy prices that the European economy has faced. So it's not all bad news, for sure. What is more encouraging, though, from the ECB policymakers' perspective, is that inflation has started to recede, and not just in headline terms, but also in core terms. How long-lasting that is, that will be the key question. And certainly, they don't want to declare victory quite yet on that from the ECB speaker's side, but perhaps the market's right that they don't need to go that much further in hiking.
President Xi of China describes very good talks with U.S. Secretary of State Antony Blinken in the last hour. If there is a meaningful breakthrough in the relationship, how much of a windfall is likely to emerge for the European economy? I mean, that's absolutely crucial.
Absolutely. I mean, the clear rise of China over the past decade or two in terms of its tie-ins with the rest of the global economy has been very strong. Europe, where manufacturing is still quite important, is certainly exposed to that, and any thawing in relations that could help revive investment appetite more generally and could alleviate some of the concerns about the resilience of supply chains would be great news for Europe, not just the US and China themselves.
Sandra, this has been hugely valuable. Thank you for all the analysis. Sandra Horsfield, Investec senior economist. Let's get you a bit of a preview of what else is coming up. We speak to the CEO of a company whose sole purpose is to improve female and minority diversity and inclusion on Wall Street and tech. This is Bloomberg.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment cost agreement on which we could lead the charge of air travel into a post-war Ukrainian recovery.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Markets. I'm Yusuf Gameneddin in Dubai. Sandra Quinn, CEO of Paradigm Policy, a company focused on improving female and minority diversity and inclusion on Wall Street and tech, joins us now. Sandra, give our global audience a bit of insight on what kind of tools Wall Street banks have adopted from some of your structures.
Yeah, so thank you so much. So we are excited to have this conversation, and the tools that we've been able to provide some of our Wall Street companies is really around our 5-point action plan. So things like eliminating bias, ensuring that they are providing sponsorship to women and those that are underrepresented in the workplace, as well as helping to ensure that they're measuring success at every level in the organization. And Paradigm for Parity, as you are aware, is focused on eliminating gender bias in the workforce and ensuring that women are represented at every level of leadership. And part of that is also ensuring that women have senior operating roles within the company. So that's a few of the things that we've been speaking with our companies about and found great success in this area.
Sandra, one of the core arguments that you are trying to make is around leading with the data. At Bloomberg, we love data. So how do you find a way to standardize the methodology and sort of agreeing on an approach to doing this?
Yeah, so there are 3 areas that companies really should be focused on when you think about the methodology and thinking about the standard of data. And those 3 areas really focus on hiring, developing and promoting, and retaining talent. And one of the things that we've been having conversations with our companies around is really starting with where you are, quite frankly, understanding and knowing who works for you and at what level does your talent sit. And so it really starts with being at or above where you are today in order to make progress, and then setting goals or targets to help with sustained success over time.
You know, it's one thing to be adding employees, but then it's a completely different challenge when you're downsizing or right-sizing, whatever term you'd like to use, while still maintaining the broader efforts towards diversity and inclusion. What do you suggest be done there?
Yeah, so as companies are thinking about right-sizing or downsizing, they really do need to ensure that they are maintaining their diversity, equity, and inclusion efforts that they have been successful at in the past. And a couple of things that they need to do is really be thoughtful around when you're making these decisions, and many of these decisions are made in silos within companies, and these decisions are based on talent that's hired last, or based on certain roles within organizations. Companies need to have a better system of assessing talent. And that system can, quite frankly, start with how do you upskill or reskill your managers to be able to assess talent more equitably and ensure that they are keeping the best and brightest talent within their organizations. So that starts with, again, upskilling your leaders. You can also implement what I love, which is really around having a diverse review committee to ensure that the decisions that are being made in the organization can be reviewed.
I was going to follow up on that, just in terms of the review committee and how it gets integrated in a given corporate organization. I mean, where in the hierarchy are we talking? We're talking about top level, mid level?
Yeah, so we're talking about top level executives that are making decisions around talent. And when you think about a review committee, that committee can be implemented to assess those roles that are most critical to the organization. And so those roles that you have the highest cliffs or gaps around your talent when it comes to women in certain roles and that talent that's underrepresented.
Would you say that there's been a setback on the part of certain segments of corporate America in reaching their suggested goals for diversity and inclusion?
Well, the research that we have based on the organizations that are part of Paradigm for Parity, we have not seen a setback. In fact, we have seen an increase in the ability to be able to sustain their goals around women and women at every level in their organizations and women of color. While that progress has not been as steady as we'd like, that progress has been made over time because these companies have been implementing our 5-point action plan. Now, while there's been progress, there's still lots of progress to be made in this area.
I'm wondering where the government comes in, Sandra, because here in the United Arab Emirates, the government leads the charge as much as the private sector. Where is the government in the United States in sort of helping integrate some of your ideas? Because at the moment, it's very much private sector led.
Yeah, it is private sector led, but there have been opportunities for us to engage with the current administration around their women and girls policy. And I think that that's something that government can continue to do to really just push the agenda forward to ensure that companies are being held accountable and companies are being encouraged to create and implement these strategies to ensure that they're creating a more equitable workplace and workforce.
This has been very, very interesting, Sandra. Thank you very much for coming in to discuss some of these themes. That's Sandra Quinns, CEO of Paradigm Policy. Just a couple of lines hitting the Bloomberg on the discussions between the Secretary of State and the President of China, Xi Jinping. Basically, Xi indicating that he believes the U.S. and China can overcome difficulties. This is according to the state news agency, and is urging the United States to adopt rational, pragmatic attitude, always hopes to see sound, steady U.S.-China relationship. We will continue to monitor. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Markets. I'm Yusuf Gameneddin in Dubai. Global transportation ministers met this weekend at a G7 meeting in Japan. Bloomberg's Haslinda Aman spoke exclusively with Pete Buttigieg, the U.S. Secretary of Transportation.
As we seek to de-risk and diversify our supply chains and our economic relationships, we do want to make sure that these capabilities are not concentrated with any one country. Certainly with a country that may demonstrate a willingness to use these in ways that are not connected to what is the best going forward, either commercially or in terms of that rules-based international order. We want to make sure that at least when we can can agree on matters from climate change to public health, that we're operating on a basis that can be understood to be for the benefit of all. Those are the kinds of things we're focused on here at the G7.
You talk about de-risking. Are there any other sectors that need de-risking? Some point to perhaps even the drug sector in China. I mean, the world is reliant on basic drugs when it comes to, China.
Well, I want to make sure not to wander too far outside of my own portfolio. I know that these are subjects of active conversation, both bilaterally and multilaterally. What I can say with regard to supply chains is that we have seen how if there is not enough diversification, you see extraordinary levels of geopolitical risk or even just logistical risk, in the U.S. Because of the extreme variation between the closures and the reopenings in Asia and in China specifically. There's a great deal of unevenness in terms of the arrival of goods that our ports were not ready to take in all at once. I think that's one example of the kind of wake-up calls that the U.S. and that the global community in general have been experiencing, especially in the last 2 to 3 years.
Since we're talking about supply chains, of course, semiconductors front and center. We've had the Chip 4, U.S., Japan, Korea, Taiwan, investing heavily in their own respective semiconductor sectors. Could that lead to overcapacity? What's your assessment? How are you looking at it?
Well, right now, overcapacity seems to be the least of our problems when it comes to the race for semiconductors, and we saw how problematic it was when we came up short. What we know is that semiconductors are going to be even more important in the future. So rather than allow ourselves to, again, be in a situation where we're coming up short, we're making sure that both in terms of our relationships with friends and trading partners and in terms of our domestic capacity, which, by the way, has also benefited from foreign direct investment that's really helping to create jobs on U.S. soil while strengthening our partnerships and relationships across the Pacific. That is something that makes sense for the future and can help us to cushion some of the geopolitical risk.
That was U.S. Secretary of Transportation Pete Buttigieg speaking with us, Linda Aman. Let's get you a look then at what's ahead. Today, you've got U.S. markets that are closed for Juneteenth's holiday. There are a couple of speakers for the European Central Bank on the sidelines of a conference in Paris. On Wednesday, we'll get the latest inflation print out of the United Kingdom. Plus, we've got a busy day on Capitol Hill with a Fed nomination hearing as Chair Powell kicks off his 2-day testimony. And finally, the Bank of England delivers its rate decision on Thursday. All highly anticipated events. I want to get back to the market action for you, where a sense of caution continues to weigh on risk appetite. You've got the geopolitics and the U.S.-China summit, and then at the same time, our speculation around what's going to come eventually, if anything, in terms of government stimulus in China. On the S&P 500 mini, we're lower. In terms of the European stock story, we're lower. Eurodollar's at 109.10. German 10-year yields holding steady. And then Brent crude, just clawing back a little bit of ground, but still under 76.50 a barrel. Coming up at the next hour, Colin Graham, Robeco, head of multi-asset strategy, is going to join the discussions. This is Bloomberg.
From the world of politics.
We're not going to be relying
upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Limes.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no
longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
It's 6 a.m. in New York, 11 a.m. in London. US markets are closed for a public holiday. I'm Anna Edwards in London. Welcome to Bloomberg Markets. A rough start to the week. Global stocks falling after Wall Street's second quarter rally loses steam late last week. Chinese President Xi Jinping tells US Secretary of State, quote, very good progress was made in US-China ties following their meeting in Beijing. And the world's largest air show returns to Paris after a 4-year hiatus. We will hear from the CEOs of some of the world's largest airlines. Welcome to Bloomberg Markets, everybody. It is a US public holiday, of course, so no trading over stateside, so normal programming will resume tomorrow, if you like. Today we have special programming, though, coming out of London this morning, and this is what the European equity market picture looks like. It's a little dark red, isn't it? It's a little red, it's a little gloomy, but losses of around 0.5% on the Stoxx 600. Let's show you where we are on markets more broadly. So the Stoxx 600 makes modest losses. A bit of China disappointment coming through in terms of the thing that's driving sentiment this morning. So not getting as much confirmation of fiscal policy measures being taken by the Chinese government over the weekend or running into the weekend, and that sets us up for disappointment. Bank stocks go higher, though, because if there's one thing that does seem to be moving higher, it is yields. This after last week with the ECB and the UK data and the Fed, arguably, there are higher rate expectations out there in some cases. MSCI Asia Pacific is down 0.7%. That same disappointment around China. Xi and Blinken, though, making very good progress. Those are the words from Xi. So there has been a sort of moderating of some of those losses as a result of some of the warm words that we're certainly getting from this exchange between Xi and Blinken. And we put in the UK 2-year yield here because we are seeing that go higher once again. A terminal rate of 6%. Could we see that? Seems to be what the market is pricing in. Some mortgage rates already over 6%. That would be 125 basis points, 5 hikes away from where we are now. So will we get one of those this week? The Bank of England looms large on Thursday. Now, Bloomberg's Simon White joins us to take us through some of the market highlights that have caught his eye this Monday. Simon, very good morning to you. In terms of the big macro themes, we had a lot of central banking news last week. Is your assessment, having listened to all of that and taken that all on board, do you think rate assessments have to move higher from here? Or I think you're somebody who maybe is not of that mind, and you think there are cracks emerging in these inflation and job market stories?
Yeah, I mean, what surprised me is that we haven't seen that thus far, as in the US job market as it's clearly slowing, but it's not slowing as fast as I thought it would. My view, I think, is that the Fed is more likely done. I think a pause will morph into quite a long pause, and the next move will be a cut rather than a hike. And I think it's going to be a similar issue, for Europe. Europe was interesting. They started to emphasize wage inflation last week, even though there's pretty good signs that, inflation is beginning to moderate. And I think in the UK, you're going to see something similar too. I mean, over the next few months, we're going to see inflation fall fairly steadily. We have the energy cap thing that's going to have an impact as well in the next month or two. And that means that real rates are naturally rising. So real rates in the US are already positive. And they will be considerably positive in the next 3 to 4 months. And the same in Europe and the UK. You know, give it 4 or 5 months, things are going to look quite different.
Yeah.
So I think certainly for the UK, that 5 hikes, I find that very unlikely that will get realised.
Right. So 5 hikes very unlikely in the UK.
Yeah.
But you don't sound like you believe the dots in the US either. You don't think?
Yeah, no, I think look, things can change very rapidly. So I think the situation we're in right now, you're looking at people looking at payrolls, which I think is the one that's kind of standing out as the anomaly, if you like. As I say, I think the situation would look quite different in 3 months. And then central banks have a very easy alighting point to say, well, look, real rates are already quite restrictive. You know, inflation is coming down. As I say, the base effects alone is going to take inflation down over the next few months. So it doesn't take much for them to sort of point to the environment and say, do you know what, it's okay, we can step back a bit here now.
Okay, why do you not see 5 coming? I mean, 5 does seem a lot of hikes to come from the Bank of England, given the Fed is perhaps on pause now. But we do still have a tight labour market. We do still have inflation at 8.7%. And now there is, if not political, media pressure on the Bank of England to act faster, do more. Why you're doubting of the 5 hikes?
I think the main issue in the UK is the mortgage market. You're beginning to see that pressure grow. Again, I'm surprised that it hasn't come through more obviously thus far. But I think it's a cumulative impact. Instantly enough, it's like the more of the mainstream media I've noticed now is picking up on it. Because people are, I think they've been drawing down their savings, so that's cushioned some of the impact. The banks are showing a lot of forbearance. That's also cushioning the impact. They're being told to extend terms. They're being told to put people on interest-only policies. So I think all this can-kicking sort of helps the situation a little bit. But again, the economy starts to look a bit worse. That cumulative impact of people having these huge rises in their mortgages starts to feed through, and I think the Bank of England, the political pressure comes in to step back.
Okay, and it does take a little while, doesn't it, for those rate hikes to filter through the mortgage market if people are on 2-year fixed, 3, 5-year fixed or whatever. And on other macro themes, though, China, certainly a dominant theme. We're just getting these really warm words coming through from China, from the Chinese government, from that visit between Blinken and then with Xi, which was to some extent up in the air as to whether he would meet him, and they did. I mean, this is all sort of warm words, I suppose, comforting words perhaps for risk takers for global asset markets.
Yeah, I mean, obviously anything in that direction is helpful. I think with China, look, the real problem is that they really did go quite hard in the pandemic. Interestingly enough, China is the only country, if you look at the last 3 or 4 years, so since the beginning of the pandemic, that actually has had consumer deflation. Every other country had inflation. And China had the combination of they didn't support the consumer or they didn't really support jobs, but they also had very stringent lockdowns. A lot of emerging countries, nominally they had lockdowns, but there's no way they could support the economy, so the economy had to sort of move on and carry on roughly as normal. China had the combination of very stringent lockdowns and very little support, so you actually had deflation. They have a problem now. They have rising youth unemployment, for instance. That's the ultimate binding constraint in China is unemployment. Like when unemployment starts to become too much to bear, they will begin to stimulate much more broadly. Right now, obviously, it sounds like they're pulling back a little bit, but when push comes to shove, that's the direction that they'll have to go in.
Yeah, and what happens to those without jobs, and how do they voice their concerns is always something interesting to watch. Simon, thank you very much for joining us. Simon White with the latest on his thinking around markets. Let's get to Colin Graham, Rebecca, head of multi-asset strategies, who joins us here on set in London. Colin, very nice to have you with us. Let's get your thoughts and similar themes, I suppose, to my conversation there with Simon. But in terms of the stock markets, let's go there first, shall we? Because we saw the S&P and the Nasdaq, a 5th week of gains for stocks stateside. Is this something that you're fearing missing out and therefore buying into, or is it something that you're happy to leave for others?
Well, at the moment, we're happy to leave it for others. We still stick to our end of year. Things are still going to slow down. It's a very narrow stock market. As we know, a few names have driven the overall index. And as active managers at Rebecca, it's difficult for us to keep up with that. So we're sticking to our guns in terms of what we expect for the slower economic growth into the end of the year. And therefore, we're actually looking to probably sell more equities into this rally.
Okay, so you're not worrying that the rally will broaden out and that, that rising tide lifts all ships, not just the ones that talk about AI, which seems to have been the trend of late.
Well, we've been there before. In 2000s, it was anything with China in the name. And in the late 90s, anything with internet in the name did well. So we have seen a little bit of broadening out last couple of weeks, but I think it was more to do with the China stimulus, because you've seen commodities bounce very strongly last week. So it feels like it's more to do with the China stimulus than necessarily what we're going to see in Europe or indeed in the US.
Yes, there's China and AI themes pushing things higher, even if higher rates could threaten, but don't seem to. What are you seeing in the yield curve right now, the shape of the yield curve? We're still in inverted territory in a lot of places. What kind of messaging are you more recently taking from those curves?
Well, if you just looked purely at the yield curve, you would say, well, actually, we're going into recession. But if you actually look at things like the swap curve, then it's not such a clear signal that the recession is on our doorstep. So there are mixed signals coming out of the yield curve here. But from our perspective, we've been using the strength in high yield to take some profits from those positions. We're also beginning to extend our duration as well, just as portfolio insurance, that if equity markets start to disappoint, then we've got something else that's going to generate returns in our portfolios.
And where do you stand on the Fed then, and this expectation in the dots that we'll get 2 more hikes? Are you buying that, or do you think that's some sort of way of managing our expectations, and we will be in a pause?
Look, we've been saying that the Fed's going to have to stay higher for longer. The inflation rate's coming down, but it's going to take a bit of time to get back towards its target. And I think the easy yards for inflation coming down is done. And so it's much harder now for inflation to fall. So we've always been a lot more hawkish in terms of what Fed has to do. And now you can see the markets move from cutting, I think 3 months ago it was 100 basis points by March next year, to no cuts this year. So the market's come more to be in line with our position. I still think the Fed's going to have to hike, but they will do what the market is, and the disappointment will come when the Fed has to cut or not.
You make an interesting point in your notes ahead of our conversation about it being not just a coincidence that the pause is happening at a time when the Treasury needs to raise a lot of money. I mean, is that part of the argument, do you think?
I think the Fed takes a lot of things into consideration, and as you go through the various elements, that was the one that struck me and jumped up at me, saying, well, actually, if any time's a good time to pause, then today is probably a good day.
Right, okay, so hence the pause in your view. Now, last week we saw the ECB, of course, moving on rates, and there's a lot of focus on the Bank of England this week. I just saw a red headline across the Bloomberg actually says that the UK 2-year yield rises to 5% for the first time since 2008. So now we've gone past the levels that we saw in October last year with that mini budget that turned out to have a sort of much more maxi effect on the markets. So we've gone past that comparison, and we're now back to 2008 comparisons. How much further do you think we have to run on the UK rate story?
It's a case of your time horizon. So if you think of what's the next couple of moves in the Bank of England, then 5% might look too low. But if you're thinking more out a year's time, then you should be thinking, well, actually 5% is too high. So you could see rates go higher, but we're discussing on our team saying, well, actually the market's looking much more interesting for taking long duration positions in.
Is this going to be an economy where something breaks with some sort of drama, or is it going to be a slow realization that actually the higher rates are making life very difficult, increasingly difficult for parts of the consumer space? How will this play out, do you think?
Well, I think you're seeing it already. The NFIB survey was saying that small businesses are struggling with demand, not with supply of labour, not with supply of goods. It's actually the demand side of things that's a bit softer. So you are seeing some cracks. Now, look, if this is all we've seen, with the regional bank crisis, the LDI crisis, in this cycle, then we're probably wrong. But I do have the suspicion that we're not there at the end of this, because real rates have only just turned positive. So, and are likely to go higher. So it is likely there is something else coming. Don't know what it is, don't know when it will come, but I think that positioning for sort of the medium term, sort of 9 to 12 months of global economic slowdown, I think is the right position for clients.
Are we well served by guaranteeing that we have an independent Bank of England? Is that still sort of the mantra? It's something that was much talked about during that mini budget last October, where it looked as if some in government were moving to limit the independence of the Bank of England. And now, once again, we talk about this because front pages of many newspapers put criticism on the Bank of England.
Oh, I think there's been a narrowing of the gap across many economies between central bank and the Treasury. You know, central banks have been buying Treasury bonds across the world, so they're in it together, if you get what I mean. So that gap isn't as clear cut as it was. So it's getting closer. So I think this is just the story that's going to come, that actually they realise they're in a symbiotic relationship and they need to work together.
Okay, Colin, thanks. Thank you very much for joining us. Colin Graham there from Rebecca, Head of Multi-Asset Strategies. We thank him for his time this Monday morning. Coming up on the programme, Credit Suisse may be due for a, quote, massive downsizing of its investment banking business after its takeover by UBS. That is according to, or one interpretation of at least, the writings of CEO Sergio Ermotti. He's been writing in a newspaper over the weekend. What do we read into his comments in those newspapers? We'll get an update on the Swiss banking landscape shortly. This is Bloomberg.
The Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg. Moment news breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. The top names in business are on Bloomberg.
The energy in Shanghai was like New York on crack.
Things are going to get worse in the economy at the same time as you have this internal conflict.
We need more bipartisan conversations because this is an American issue.
Are some of these assets commodities or are they securities? And we've been asking the SEC for a long time.
But I think there's more problems under the surface.
It's incredibly exciting, as important as the birth of the internet.
Nobody covers business like Bloomberg, your global business authority.
Welcome to Bloomberg Markets, 11:16 here in London, 6:16 if you are in New York. Welcome to Bloomberg Markets, special programming because of the US public holiday. Let's get to the latest news out of China, the geopolitics of interest to us, as well as the lack of fiscal stimulus coming over the weekend. Chinese President Xi Jinping says, quote, very good progress was, it is very good that progress was made on US-China ties after a meeting with the US Secretary of State Anthony Blinken. Bloomberg's Rosalind Matheson joins us now with more. So that's the headline, Ros. Good morning to you. very good that progress has been made. Dig a little deeper. What does this? What are these latest news lines? And there are quite a lot of them. What do they add up to?
Well, certainly it's been an encouraging visit from the US Secretary of State Antony Blinken after months of delay. And what it really shows is the desire from both the US and China to put a floor under ties, to say at least let's make sure the relationship doesn't get any worse than it is. We're not going to pretend it's going to be great anytime soon, but let's at least agree to stop having it deteriorate further. And very much you can see from the comment from the Chinese president saying very clearly it's very good that progress has been made. So the language is coming from both sides. Certainly it's in their interest to do so. Right now, we're seeing warning signs on the Chinese economy. That could bleed through to the rest of the world, certainly to the US. Incentive there to actually stop the overarching tensions, at least for a bit, to allow them to focus on fostering growth. That doesn't mean, though, the underlying problems have gone away.
Yes, that's interesting, isn't it? Because one of the lines we hear from President Xi, he says that he believes the US and China can overcome difficulties. So those underlying problems, I suppose, he references that. This is according to the Xinhua news agency. This all quite positive, really, coming from the president himself. And the fact that that meeting took place with the president, even that quite positive.
Well, certainly what they're looking for is for Xi Jinping to meet with President Joe Biden. That's the next step, and we might see that either at the G20 summit in India or at the APEC summit, which is in the US later this year, but the desire for both leaders to sit down together and paving the way for that. But again, that's because right now it's in their mutual interest to do so and to sort of put some framing around the relationship. But dig below that and you still see an awful lot of trouble that's going on, certainly in the military space, in the tech space, the cyberspace, over Russia's invasion of Ukraine. You name it, there are problem areas, and none of those really have been addressed in these meetings in a tangible way. There's no agreement to change trajectory around sort of investment rules or anything like that.
And just remind us of why prior meetings fell apart. That spy balloon, the Chinese spy balloon over the United States, that was which then the US reacted to, and the Chinese said the US had overreacted to. That led to sort of cancellations of previous meetings, didn't it? So we're sort of finding our feet once again after that.
Well, that's right, and it shows that really in the end things are very, very fragile. If things blow up simply because an alleged China surveillance balloon flew over US airspace and that sort of like torpedoed everything for a matter of months, that things are still really, really fragile. There's a lot of tension, as I said, between them on a bunch of issues, and Xi Jinping talked about the need to have mutual respect. That's a very clear message. Hang on, when we do talk, we need to be sitting down at the table as equals. The world's two biggest economies need to be meeting on that footing. In a sense, from China, at least, it doesn't feel it's being treated that way. At the same time, on the US side, there's a real sense that China's not behaved particularly well in the economic space, on trade, on business, and there have been penalties that have flown from all of that. So there's really quite a sense that things are quite delicate, even though they've agreed at least to perhaps have a trajectory towards a meeting.
And you mentioned the two biggest economies. I wonder if it's the realization of the difficulties that the Chinese economy is facing right now that are bringing these conversations, or adding some impetus, I suppose, on the Chinese side to these conversations, underlining the importance of having good dialogue and good relationships with other large economies.
Well, that's right. And of course, Xi Jinping likes to focus very much on things at home when it's not great. And he likes to not have the distraction of things around him externally, because number one for him is his power base at home for the Communist Party and for himself personally. And so if the Chinese economy is struggling, he needs to be very focused on that. So we're talking about the stimulus that we're seeing, perhaps a lack of on the weekend, but certainly a sense that he needs to knuckle down and focus on that for his own sake. And so he doesn't like to have a bunch of other problem areas at the same time. So very much a signal from him that he wants to put this at least to a floor for now, so he can focus on addressing the Chinese economy.
Ros, thanks so much. Thanks for bringing us the analysis. Bloomberg's Ros Matheson with the latest on that Blinken visit to China. Let's pivot to a micro story that has certainly caught our attention over recent months. UBS CEO Sergio Amolti hints at big cuts at Credit Suisse. Bloomberg's Jan-Patrick Barnett joins us now and can take us through some of the details. Jan-Patrick, so what we got here was Sergio Amolti writing in a newspaper, I think, over the weekend. What can we interpret from that?
Well, we get a similar message that we have seen from the, excuse me, from the chairman
just over a week ago, and that is something that sounds to me like we are pleasing the investors first. So the managers, the top managers of the bank, want to make sure that the bank is kept being run in the same way as before UBS, that is, and that they wind down the risk of Credit Suisse, and that they're not like moving into another trapdoor of too risky business, too much risk appetite, and then causing issues and pain for investors on the equity and on the bond side. So what we're hearing from Emotti is that he wants to cut down the Credit Suisse investment bank, a massive cut. So we don't know exactly how big that will be, but then when a CEO says like he wants to cut down massively, I would always assume it's like 50% or more, at least in terms of the headcount. So that's what Credit Suisse is facing right now, and it's probably not the end of the story at this point.
Not the end of the story, so we wait to get an announcement as to just how drastic those cuts could be. But on the culture side of things and the risk-taking, JP, this seems to be something that certainly, I mean, there's a lot of international interest, but domestically a lot of interest in Switzerland as well about whether the culture, the UBS culture, can consume the parts of Credit Suisse it wants without bringing in cultural influence that it doesn't want.
Absolutely. That's going to be the biggest challenge for the managers, I believe, that they have to pull off over the next couple of months and even years, that they need to create a new bank where you have your certain key people still be happy, and those people that you need to take over from Credit Suisse do their job in a good environment and feel welcomed in the new company. On the other hand, you have to make absolutely sure that you don't run into another trap like Credit Suisse did, with like too much risk or with deals that are going wrong, and then investors, taxpayer money is at stake again. You have to make absolutely sure that this is not going to happen. And these are two things on the different ends of the spectrum, I would say, and that's going to be the big challenge for the executives, how they're going to measure this, how they're going to steer the bank going forward, and how they split up the different business areas.
Yeah, so deal done, but a lot of work still to be done, JP. Let me ask you about the guarantee that they secured from the Swiss government. How important has that been in shoring up investor confidence at UBS?
Yeah, absolutely. I mean, it was part of the deal, and we saw some back and forth before the deal was closed about like how much is going into these guarantees, which instruments, and how much taxpayer money is actually going to be at stake here. Of course, we had UBS executives saying that they are very confident they don't need it, or they don't need the full amount, and that's a positive message that they want to send. But it's not said at this point yet. We need to see like how the new bank is looking like, what they really want to keep, how much wind down there is has to be done over the next couple of weeks and months, and how much money it's going to cost the bank. And that's details we don't have yet at this point, and it's going to be very interesting for investors to see.
The size and scope of this integration, JP, suggests that this will take many months, years perhaps. What's the thinking there?
Yeah, absolutely. I don't think that this is something on the short term. We probably in 2025 or 2026 we will still speak about it. We know that wind downs can take very long time. We saw several banks who took like 10 years until they really like completed the wind down of assets that they didn't really want. Credit Suisse is just a good example, right, where the wind down wasn't actually like fully completed before the bank fell into disgrace this year. So this will take years. The integration is very complex. It's two major banks. They have to figure out a lot of details, technology, client split ups, how the capital is allocated. So we will talk about this for a very long time.
Yeah, I'm sure we will. JP, thank you very much for bringing us the ongoing conversation. Jan Patrick Barnett joining us there from Switzerland with the latest on the combination, on the purchase by UBS of Credit Suisse. Still ahead, we will get into an economic conversation. Freya Beamish joins us, Chief Economist at TS Lombard. Lots to discuss. We're going to hear from Jerome Powell twice this week. He's going to be on Capitol Hill to testify. What will the focus be there? We'll also get a take on the UK economy. UK two-year yields rising this morning to 5% for the first time since 2008. That upward yield story continues. The Bank of England meets this week. This is Bloomberg.
what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to Bloomberg Markets, special edition of programming because, of course, of the public holiday in the United States. So we're here live in London. I'm Anna Edwards. Let's just get to a look at some markets for you. I pulled out some FX pairs, or rather the Bloomberg Dollar Index and some FX pairs, just to have a quick check on where we are there. The dollar on the rise a little, up 0.2%, but that's after the falls of last week. Interest rate differentials, much talked about when we saw what the ECB did, of course, and what the Fed did not do. Then we've got the Chinese currency in there for you, CNH up. We've got some movement there, as you can see. 716.22 is where we trade. Policy disappointment certainly hitting stocks in China and to some degree hitting the currency as well. The pound pretty flat this morning on the pound, 128.12, but we're not flat on the UK rate story, and we're heading into a Bank of England meeting on Thursday, so lots to talk about there. How many rate hikes will we get in the end, despite what is priced in? And the euro pretty flat, although down 0.2%, 109.16. We've heard from Simkus and Casimir, comments from ECB officials, both of which add up to keeping our options open for September. That seems to be the message that we're getting through from ECB officials this morning. Let's talk to Bloomberg. Simon White joins us once again to take us through market thinking. And Simon, I mentioned there the pound, and I know that you've been writing recently about sterling's rally, and you say that it's got rising fundamental, its rise is fundamentally underpinned. It isn't just a function of dollar weakness, although we saw some dollar weakness last week. Why do you come to that conclusion?
So, well, it's every FX obviously is a pair. So, people talk about something's strength, but you have to look at it in relation to something else. So I tried to figure out, essentially, if you look at the correlation between, say, sterling versus lots of different currencies, and if these correlations are pointing in the same direction, it tells you it's more about sterling's strength than the dollar's weakness. So 50% or more than 50% of the rise of cable, sterling versus the dollar since September, has really been driven by sterling rather than dollar weakness, which is, in distinction to the euro, where it's more like, to 80% of the euro's rise is down to dollar weakness. Right. So in that sense, it's kind of very interesting that sterling's rally is kind of broadening. So people are obviously looking at the rate expectations. The Bank of England obviously has a lot of hikes penciled in. That's pushing rates higher. So I think that's driving a sort of much more fundamentally driven rally at the minute. And that's why I think the momentum could carry it forward a bit further. Yeah, why do we have some periods where when interest rate expectations rise in the UK, that pushes the pound higher, and you seem to be referencing that there with comments about the rates environment. Other times you see the market, well, you see expectations of higher rates, or you see tight labour markets, high inflation, and all of that kind of data adding up to assumptions about higher rates, but then the pound falls because people get very worried about the economy. Which of those environments sort of tends to dominate, and why, do you think, Simon? Well, sterling or cable is a very momentum-driven pair, so it always goes up a lot further than you think it's going to go. And it feels like it's in one of those periods where, it wasn't long ago, obviously, where we're talking about, sterling, versus a dollar hitting 1 and things like that. And now it's bounced back, got to 120, we're at 125, and now we're up at around 128. And it'll probably go a little bit further. I think people will start to look at the fundamentals a little bit more in terms of the jobs and things like that. You mentioned the economy slowing. and at which point it might be taken back a bit lower. But it seems to have this ability to say to go a lot further than people expect. And positioning is quite clean as well, but it's not particularly extreme. So normally a bit more concerned if everybody was already very long sterling. But if you look at commitment to trader reports, you look at the net speculative positioning, it's not particularly long. So you've got quite clean positioning. So it could carry itself forward. You have these CTAs and things, they're looking at momentum, they follow momentum. So it's clearly got momentum right now. And it's rallying against lots of different currencies. Obviously it's rallied hugely against the yen. So if you look at sterling yen right now, it looks very stretched. So, clearly some of these pairs could see a little bit of pullback because they're already looking very overbought.
What kind of bad news about the UK economy then would be enough to change the direction on those?
Well, I think, look, it's going to start for, I don't think they're going to deliver 5 rate hikes by the end of the year. And I think the reason is because leading data in UK is still turning down. It's still fairly negative, which suggests that, the economy is slowing. It's maybe not quite as bad as people thought it was going to be 6 months ago, but it's clearly not in a good state of affairs. And you add to that the rising burden from people coming off their fixed rate mortgage deals. And I think that really cumulative impact. The UK has a tremendous amount of people in fixed deals. They solved the problem back in 2008. Everybody was on variable deals, and that was the right thing to do, get people on fixed deals, and that's fine when rates were going lower, but now rates are obviously turning around, and now you've got a lot of people that are getting caught very short, and the cumulative impact is still building. Yes. 100,000 odd people a month coming off these fixed rate deals. And all the people that have already, you probably haven't heard about the stress as much because people are, they're drawing down on their savings. Nobody wants to sell their house if they're, forced to begin with. But that pressure is building in the background.
Okay, so we watch the housing market dynamic carefully then. Simon, thank you very much. Thanks for joining us once again, Simon White, with thoughts on the UK. Let's start there in our conversation with Freya Beamish, Chief Economist at TS Lombard, and then we'll broaden the conversation, Freya, to other geographies. Thanks so much for coming to talk to us this Monday. Let's start with your views on the UK, because I think you also share Simon's scepticism that we will get the 5 hikes that are currently priced into the gilt market. Explain your thinking.
I do. I think there has obviously been some kind of repricing of the UK premiums, and actually a lot of that story is sort of front-running the secular story that we've been talking about. We do think that gilt yields will be higher on a secular basis, as in on average over the post-COVID cycle. But cyclically speaking, you can't get there all in one shift because the real economy just can't keep up with that kind of a shift. So what we've seen in the UK, yes, we have had all of the shocks. We've had 100% of the negative energy shock. That's now reversed. We've had 100% of the kind of supply side shock on the labor side, looking at this on a cross-country basis. That's reversing. There are still some kind of problems there, certainly, that it will linger over the kind of the structural term. But at the margin, it is improving. And then on the kind of the demand side, over the course of the pandemic, we did have one of the largest stimulus out of the kind of the countries in developed market space. But that has now reversed. And actually, if you look at the legacy of wealth that was generated by that, I'm talking about financial wealth here, it's gone if you look at it as a percentage of GDP. So the cushion is no longer there for the real economy. And then on top of that, we've had the kind of maximum amplification of shocks, partly because of the structure of UK markets. If you look at concentration in supermarkets, if you look at the amount that we import, it's more difficult to sort of undercut. And then there has been until this year the weakness of sterling that's still feeding through into prices. So margins in the UK have actually been expanded by one of the most across developed markets and have taken longer to recompress. But we are now starting to see the likes of Tesco's being a bit more worried about that. And then as Simon was saying, we're now starting to see the feed through of that tightening of policy so far.
Okay, so that sort of grosser story ties into the inflation dynamics. Freya, talking about what's happening with the expectations around the UK, so you don't think we get 5 hikes, and you say that gilts are due some recovery, but certainly not seeing that today. We see gilts falling and the yields continuing to rise, the UK 2-year yield rising to 5% for the first time since 2008. When do we get any kind of turn then in the gilt market?
I think what we've had is this succession of upside surprises in the UK, more so than anywhere else. In fact, the surprises have kind of shifted downwards elsewhere, and the UK is just lagging there. And that goes back to the discussion that we were just having in terms of the UK has had all of the shocks and the worst amplification of the shocks. But that doesn't mean to say that on a cyclical basis, we're likely to actually see the slowdown. We're likely to see the turning point coming. It's just it's taking longer for the snake to digest the pig in the UK case. And then when we think about the gilts market and the financial flows here, I think something that's very underappreciated is the extent to which there's been this kind of monetary policy drag, monetary fiscal policy drag on the gilts market as you're getting this major shift from huge QE to QT at the same time as the deficit has actually done a little bit of re-expansion in the latest data. And that balance between what the Bank of England balance sheet is doing and the deficit is doing is well correlated with yields and actually explains a lot of the increase that we've had. So the good news there is that swing from QE to QT has already passed and is already in the price.
Right. Freya, if I could pivot to get your thoughts on China, because I know that's an economy you follow very closely. And there does seem to be some disappointments in markets, as evidenced by weaker stocks and by a weaker currency in China. Disappointments around a lack of detail on fiscal stimulus coming through. I'm just seeing some lines now about accelerating electric car charging facilities, but I'm sure the market was waiting for more. What do we look for next on China and the extent to which they are willing to stimulate fiscally?
Yeah, the policy so far this year has been very much to sort of rely on the release of pent-up demand, which we've always said was going to be disappointing because the Chinese household does not have that accumulation of savings that the rest of the world, that developed markets did. And against that, they've had this great loss of wealth. So when they've been reopening, they haven't actually had this great kind of firepower behind them. It's been purely a behavioral thing. And that's petered out extremely quickly. And we can talk about stimulus and whether stimulus is going to come through. I think they are very constrained in that. But the fact of the matter is that if they had wanted to have a stronger H2, then they needed to be doing more stimulus last year, because that's the amount of time it takes to feed through. And instead, what we saw was, yes, the PBOC did start to loosen around the end of last year. We've now seen the actual rate cut coming through. But that's not really showing up in the parts of the economy that you would need to get more comfortable about seeing faster real GDP growth. In particular, we're not seeing a big turnaround in M1 growth. And then on top of that, as you're saying, that the fiscal kind of stimulus that is coming through, very much the most important part of fiscal stimulus in China is what's happening with the infrastructure bonds. And that's all been very front-loaded this year, in fact, more so almost than ever before. And that leaves very, very little for the rest of the year. And everything else that's kind of coming through looks a lot like sort of tinkering around the edges.
We do have Anthony Blinken, of course, U.S. Secretary of State. He's in China right now. We're waiting for a press conference from him. So when that starts, if it starts shortly, we'll try and bring that to our audience. Do you take positive signs from this kind of visit, Freya, that the almost warm language between the two, at least talking about very good progress being made on the relationship? That's the Chinese message this morning. Is this comforting in some way?
Yeah, it's comforting to hear those words. I think the bigger picture, though, is that it's very hard to turn this kind of ship around once it's sailed. And the reality of the situation is that we've got a structural slowdown in China. And historically, when you see that kind of a trend, when you see that kind of a turning point being reached, the reaction is to sort of look abroad and to say, well, where can we kind of place the blame for that? So it's not a kind of they would have to be bucking the historical trend if we were going to see them kind of reaching out and being more constructive on a longer term basis. And actually, that's a large part of why we do see higher inflation on a secular basis at the global level, because of this kind of deconstruction of the supply chain. And that's not about kind of outright deglobalization, but it is about kind of decoupling between China and the US and the euro area and developed markets more broadly. And that reintroduces frictions into the global economy, and you get a part of the reason why we're saying there's faster inflation on a secular basis.
I suppose, and one of the live questions, Freya, is how extreme does that become? How significant does that trend become? You say it's not full deglobalization, but it is some kind of decoupling. But how substantially? I suppose that's something that economists globally are going to be wrestling with.
Yeah, I think even without the kind of political layering on top, the geopolitical kind of deterioration on top, you've already got the fact that the pool of undervalued Chinese labor that entered the global economy in 2001 has become less and less competitive. And you're never again going to see such a large pool of undervalued labor coming into the global economy, just because there isn't the scale for that to happen again. And I think this was a huge determinant in the secular stagnation that we've had particularly over the 2010s, especially if you layer on top of that the deleveraging that was necessary after the subprime crisis. So even without the kind of the decoupling and the deglobalization, there's no kind of drag anymore from hyperglobalization on wage growth in the rest of the world. And then on top of that, you've got the decoupling.
Freya, thank you so much for your time. Yeah, there's no other China that you can move to. There are other countries with lower labour costs, perhaps, but they're not the scale of China. Freya, thank you so much for your analysis. Freya Beamish of TS Lombard joining us there. Coming up, the CEO of Qatar Airways will be talking to us from the Paris Air Show. We continue our focus today on aviation from Paris. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto. Welcome back to a special edition of Bloomberg Markets. Public holiday in the United States, which means special programming coming from London. I'm Anna Edwards. Now, the world's largest aviation showcase returns. Plane makers are gathering at the Paris Air Show to announce new deals and innovations in a post-pandemic world. Bloomberg's Guy Johnson is at the event, and he spoke with the CEO of Qatar Airways, beginning with the company's new plane orders.
We already have a large amount of orders already placed with both Boeing and Airbus in the past. And we are just waiting for their supply chain to ramp up in order for us to get our airplanes back. I know that everybody is very excited. Both manufacturers want huge orders, but you can always get the orders. And when will you supply them? And that is the big question.
How many of the planes that you're currently expecting are you getting on time?
None. All our aircraft deliveries are delayed. Because I don't blame the two manufacturers. It is a supply chain that was really decimated during COVID. People didn't realize, and the governments didn't realize, that they should compensate the industry to keep everybody on their jobs for when there is a turnaround. And nobody paid attention except Qatar Airways. And this is why we were the highest growth airline during 2020-21 and 21-22, with the highest ASK of any international airline in the world.
As you say, you've bounced back. The industry is now bouncing back as well.
Well, we are back to 2019 levels.
Is this sustainable? Is the kind of growth that we're seeing... Right.
Yes. For the foreseeable future, yes.
What does the foreseeable future mean?
A few years, because there is shortage of capacity. There is no airplanes available. Both the manufacturers are struggling to deliver aircraft, and once they deliver the aircraft, they are on the ground because they have engine problems, and the engine manufacturers cannot live up to the supply requirement of the two manufacturers.
But as you say, the industry is capacity constrained at the moment. Therefore,
Yes.
are you not worried about if you don't get a slot, that you won't be able to get the aircraft that you want in the future?
Yeah, this is my biggest problem, and this is going to block the expansion plans we already envisaged before 2019 of what will be our growth rate each year on year until the end of this decade.
So you don't think now would be a good time, though, to place those orders to make sure that
no,
you...
No, because even if you place... First of all, I don't need to place orders because I already have substantial orders in the order book of both Airbus and Boeing. The problem is that even if you order today, you're not going to see those airplanes for the next 5 years.
How long do you think this is going to take to sort out?
I agree during your economic conference in Doha. Both me and Dave Calhoun, we mentioned that the supply chain will not come to the 2019 level for at least the next couple of years or even more.
So is the industry going to be supply constrained during that period? And does that mean that fares are going to remain high for the foreseeable future? Is this good for yield?
It's all supply and demand. You know, when there is less supply and there is double demand, you then have to ask the price you need because people want to travel.
So fares are going to stay higher?
I think fares are going to stay high. Also, keep in mind that the oil prices are high. We are now being pushed to get SAF into our airplanes, which again is exorbitantly expensive and unavailable. So all this is a factor that is increasing the cost of the value that you have to pay to travel.
So the move to SAF is going to be inflationary, you think?
Absolutely. If you know you are paying 4 times the price of F-gas to have SAF, what do you expect?
And do you think that the 2050 targets are looking achievable at this point?
No, I don't think so. Please explain to me one SAF manufacturer undertaking that they will be able to fill in the demand of 2050. I don't think so. Let us not fool ourselves. First, let us see from them, from Shell, ExxonMobil, Total Energies, all these people, ask them what is the volume they envisage they will produce, and they will never give you an answer.
You're going to see some quite significant competition in the Gulf. Sir Tim Clark, I've spoken to him recently. He's expecting to place a new big order for wide bodies. And we now have Riyadh Air. How much competition are they going to be providing for you? Are you worried about that kind of competition?
I love competition.
Okay. How strenuous do you think the competition is going to be?
It will be tough, but at the end of the day, it will be the survival of the fittest.
And you think you are? Why do you think that Qatar is going to be the fittest?
I didn't say I will be the fittest, but I told you that I like competition, so let's see.
That was Bloomberg's Guy Johnson with a punchy Qatar Airways CEO talking to him at the Paris Air Show, talking about growth plans, sustainable aviation fuel. That was the SAF that they were talking about, in case that was lost on you. With the familiar hum of aviation air conditioning in the background, that was the Paris Air Show. For more on the Paris Air Show, subscribe to the official Bloomberg Paris newsletter. There'll be more on there, of course, on the aviation sector. Now, the AI gold rush spreads across Silicon Valley. One of those companies that sparked the boom is OpenAI and its ChatGPT and DALL-E platforms. Bloomberg's Emily Chang sat down with the OpenAI Chief Technology Officer, Mira Murati.
We didn't set out to dominate search. What ChatGPT offers is a different way to understand information. And you could be, searching, but you're searching in a much more intuitive way versus keyword-based. Mm-hmm. I think the whole world is sort of now moving in this direction.
The air of confidence, obviously, that ChatGPT sometimes delivers an answer with, why not just sometimes say, I don't know?
The goal is not to predict the next word reliably or safely. When you have such general capabilities, it's very difficult to handle some of the limitations, such as what is correct.
Some of these texts and some of the data is biased. Some of it may be incorrect. isn't this going to accelerate the misinformation problem? I mean, we haven't been able to crack it on social media for like a couple of decades.
Misinformation is a really complex, hard problem. Right now, one of the things that I'm most worried about is the ability of models like GPT-4 to make up things. We refer to this as hallucinations. So they will convincingly make up things, and it requires, being aware and just really knowing that you cannot fully blindly rely on what the technology is providing as an output.
I want to talk about this term hallucination because it's a very human term. Why use such a human term for basically an AI that's just making mistakes?
A lot of these general capabilities are actually quite human-like. Sometimes when we don't know the answer to something, we will just make up an answer. We will rarely say, I don't know. And so there is a lot of human hallucination in a conversation, and sometimes we don't do it on purpose.
Should we be worried about AI, though, that feels more and more human? Like, should AI have to identify itself as artificial when it's interacting with us?
I think it's a different kind of intelligence. It is important to distinguish output that's been provided by a machine versus another human. But we are moving towards a world where we are collaborating with these machines more and more, and so output will be hybrid.
Bloomberg's Emily Chan speaking with the OpenAI CTO, Mira Murati. Really interesting conversation, reflections there on the use of very human language, humanized language, to talk about what is an artificial intelligence. Let's just get to the markets then for you and show you where we are. European stocks, we are without the United States, of course. Public holiday, that's why this is Bloomberg Markets, a special edition coming to you from London. But we are without the US, and in that context, we lose a little bit of ground here in Europe. We're down by 0.7%. We've got a broad-based session of losses underway here in Europe. One sector that's doing pretty well, though, is the banking sector, up 0.1% or so. As rates go higher, we've certainly seen that as part of the UK narrative today. As rates go higher, might there be something in it for the banks, at least in the short term, and that seems to be supporting that sector. MSCI Asia Pacific down by 0.7%. The big macro story of the morning handed to us that we inherited from Asia was around China, and a bit of disappointment about a lack of concrete fiscal measures being announced ahead of the weekend and over the weekend to support the Chinese economy. There had been some expectation building that we would get more, and we didn't. And so some of those Chinese stocks, some tech names in particular, sold off in China, onshore, and also over in Hong Kong. The rate story, really interesting. We monitor the UK rate story, the highest level since 2008 on those UK two-year yields. It went above 5%. You might have seen that just a moment ago. Now just retreating from that, but above 5% for the first time since, well, to levels we have not seen at least since 2008, exceeding those levels from the mini-budget of October last year. Coming up in the next hour of Bloomberg Markets, I'll be talking to James Athey, Investment Director of Aberdeen Investments. Plenty to discuss, from China to the UK to what to expect from the Fed. This is Bloomberg.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Are you renewing or taking out a new car insurance policy this year? Then expect to have to pay a lot more. The reason? Car insurance claims costs are rising rapidly, and the US's largest car insurance company, State Farm, recorded a $13 billion underwriting loss in 2022. Blame high used car prices. Vehicles are a lot more expensive to replace than the insurance company calculated when they wrote the policy. Repair costs are rising, replacement car parts are more expensive, and modern cars come stuffed full of electronics, which means they're more expensive to fix. The thing is, car insurance actually fell in the early part of the pandemic because we were all driving less. The problem is, as we returned to the roads, people began driving more recklessly and therefore getting into very serious accidents. Cars are also being stolen more frequently. So if you drive a vehicle that's very popular with thieves, like a Range Rover, Hyundai, or Kia, then you can expect your premiums to rise even more. Car insurance prices are rising faster in the UK than in the US, where insurers have to ask states for permission to grant increases. Places like California have been reluctant to grant them, but increasingly insurers are winning the argument that their losses are unsustainable. So expect your car insurance premiums to rise, maybe a lot.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
DOJ or other authorities.
Could face bigger challenges.
It was going to keep rate World Cup.
This is a 3.
As the economic picture does.
The BOK is getting ready to make
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Markets. I'm Anna Edwards in London. Here's what you need to know. Today, U.S. Secretary of State Anthony Blinken is meeting with Chinese President Xi Jinping in Beijing. That meeting concluded, a sign that tensions between the two countries may be easing. Plus, a tough week ahead for the UK Prime Minister Rishi Sunak, a parliamentary vote on his predecessor Boris Johnson today, and a likely Bank of England rate hike once again on Thursday. Plus, Credit Suisse may be due for a, quote, massive downsizing of its investment banking business after its takeover by UBS. That is according to an interpretation of the words of CEO Sergio Emotti. Welcome to the program, everybody. Special programming because we are without the U.S. equity markets and bond markets. I'm Anna Edwards, live for you in London. U.S. Secretary of State Anthony Blinken is speaking after his meeting with the Chinese President Xi Jinping over in Beijing. Let's just dip into this press conference and bring you some highlights.
About the challenges posed by the PRC. The United States will advance a vision for the future that we share with so many others. A free, open, stable, and prosperous world, with countries upholding and updating the rules-based order that has, for years, safeguarded peace and security globally. To shape that future, we start with diplomacy, including with China. I came to Beijing to strengthen high-level channels of communication, to make clear our positions and intentions in areas of disagreement, and to explore areas where we might work together when our interests align on shared transnational challenges. And we did all of that. Here in Beijing, I had an important conversation with President Xi Jinping. And I had candid, substantive, and constructive discussions with my counterparts, Director Wang Yi and State Councilor Qin Gang. I appreciate the hospitality extended by our hosts. In every meeting, I stress that direct engagement and sustained communication at senior levels is the best way to responsibly manage our differences and ensure that competition does not veer into conflict. And I heard the same from my Chinese counterparts. We both agree on the need to stabilize our relationship. During those meetings, we had a robust conversation about regional and global challenges. That includes Russia's war of aggression against Ukraine. I reiterated that we would welcome China playing a constructive role, along with other nations, to work toward a just peace based on the principles of the United Nations Charter. We also spoke about North Korea's increasingly reckless actions and rhetoric. All members of the international community have an interest in encouraging the DPRK to act responsibly, to stop launching missiles, to start engaging on its nuclear program. And China is in a unique position to press Pyongyang to engage in dialogue and to end its dangerous behavior. I raised U.S. concerns, shared by a growing number of countries, about the PRC's provocative actions in the Taiwan Strait as well as in the South and East China Seas. On Taiwan, I reiterated the long-standing U.S. One China policy. That policy has not changed. It's guided by the Taiwan Relations Act, the 3 joint communiques, the 6 assurances. We do not support Taiwan independence. We remain opposed to any unilateral changes to the status quo by either side. We continue to expect the peaceful resolution of cross-strait differences. We remain committed to meeting our responsibilities under the Taiwan Relations Act, including making sure that Taiwan has the ability to defend itself. We also spoke about a range of bilateral issues, including continuing to develop principles to guide our relationship, as discussed by President Biden and President Xi in Bali late last year. We exchanged views on our respective economic policies, including our concerns about China's unfair treatment of U.S. companies. During my meeting today with U.S. business leaders who are operating in China, I heard about the problems that U.S. businesses are facing, including recent punitive actions against American firms. I also heard that U.S. companies want to continue, and indeed, grow their businesses here. And so, in my meetings, I sought to clarify any misperceptions or misunderstandings about our approach. There is a profound difference for the United States and for many other countries between de-risking and decoupling. Our country's traded more over the last year, in fact, more than ever over the last year, nearly $700 billion. Healthy and robust economic engagement benefits both the United States and China. And as Secretary Yellen testified before Congress last week, it would be, as she put it, disastrous for us to decouple and stop all trade and investment with China. We are for de-risking and diversifying. That means investing in our own capacities and in secure, resilient supply chains, pushing for level playing fields for our workers and our companies, defending against harmful trade practices, and protecting our critical technologies so that they aren't used against us. I made clear that we'll continue to take targeted actions that are necessary to protect U.S. national security. In my meetings, I also discussed human rights. The United States and the international community remain deeply concerned about PRC human rights violations, including in Xinjiang, in Tibet, in Hong Kong. I also specifically raised wrongfully detained U.S. citizens and those facing exit bans. There is no higher priority for me than the safety and well-being of U.S. citizens overseas, and I'll continue to work intensively to secure their release and their safe return home. As we work to address our differences, the United States is prepared to cooperate with China in areas where we have mutual interests, including climate, macroeconomic stability, public health, food security, counter-narcotics. On food security, we believe China can play a key role in alleviating global food insecurity. I underscore the importance of supporting a long-term expansion of the Black Sea Grain Initiative, which has facilitated the export of almost 32 million tons of grain from Ukraine, with approximately 18 million tons going to developing countries. A long-term expansion is critical for avoiding food shortages in some of the poorest, most food insecure countries in the world, as well as price surges. I raised as a priority the issue of synthetic opioids and fentanyl, a crisis in the United States. Fentanyl is the #1 killer of Americans aged 18 to 49. I made clear that we need much greater cooperation to address this critical issue. We agreed to explore setting up a working group or joint effort so that we can shut off the flow of precursor chemicals, which help fuel this crisis and a growing number of deaths. Finally, we discussed the importance of strengthening people-to-people exchanges between students, scholars, business travelers. That benefits our citizens, our economies, and our relationship. Today, I had an opportunity to meet with an impressive group of alumni from those exchange programs. In my meetings, we discussed enhancing educational exchanges, and we committed to work to increase direct flights between our countries. To continue dialogue on these and other important issues, I would expect additional visits by senior U.S. officials to China over the coming weeks. And we welcome further visits by Chinese officials to the United States. To that end, I invited State Counselor and Foreign Minister Qin Gang to visit Washington, and he agreed to come at a mutually suitable time. little later this evening, I leave for London to attend the Ukraine Recovery Conference, and I'll also have an opportunity there to brief allies and partners on this visit and to continue to strengthen our alignment. We have no illusions about the challenges of managing this relationship. There are many issues on which we profoundly, even vehemently, disagree. We will always take the best course of action to advance the interests of the American people. But the United States has a long history of successfully managing complicated, consequential relationships through diplomacy. It's the responsibility of both countries to find a path forward, and it's in both our interests and the interests of the world that we do so.
We'll take a few questions. The first question goes to Ian Marlowe with Bloomberg.
That was Secretary of State Anthony Blinken there at the press conference taking place in Beijing after his meetings with senior Chinese diplomats and indeed the Chinese president. We will leave that press conference there. We will bring in for analysis Bloomberg's Rosalind Matheson, who's with me on set once again here in London. Ros, interesting, he started out setting out how they're clear-eyed about the challenges in the relationship, and they had candid and substantive conversations, but they had both come to the agreement that they need to stabilize the relationship, and I suppose at its core, that's a positive message.
Well, that's right. It's interesting. He's talking on the one hand about the need for sort of mutualization. It's a mutual interest game here for each of them to lower the tone, but also laying out some clear markers from where the U.S. side, they feel that China has stepped out of bounds and needs to act. Just saw him list a number of things, including the supply of opioids into the U.S., for example, the question over Taiwan, saying these are some key issues for the US, but at the same time saying, again, we need to have mutual engagement on a broader array of stuff. We need to set a floor under the relationship. So it's really highlighting the balancing act that the US is going through here with China and China in turn. It's like, how do you make the overarching relationship on a better footing while the realization you've got a bunch of serious problems that you're dealing with?
Yeah, and he referenced how the US has a history of dealing with these complicated relationships through diplomacy, and that clearly the focus here. But he did talk about some areas, some potential areas of flashpoint, I suppose. He said that they had raised concerns around what he called provocative actions by China in the Taiwan Strait. But he went on to underscore how the US sees the one China policy, saying that's not changed. They don't support the independence movement. They want the status quo. That will be the kind of messaging that China wants to hear.
Well, exactly, and that's probably the agreement. The understanding was that he was going to publicly restate the US stance on it, because throughout the Biden administration, there's been a bit of questioning about that. A couple of times the US president himself has seemed to question that long-standing policy with some of his comments about the level of US support for Taiwan, and that's raised the hackles of China. So clearly sort of saying, no, we respect their current position. We don't want to upset the apple cart on any of that. We certainly don't want any kind of move towards a conflict over Taiwan. So sort of reassuring China on that front. But equally, in the longer term, there are still tensions there.
Interesting that going on to the economic agenda, he talked about trade and making the point, I mean, something you can see on the ECTR function on the Bloomberg, the value of trade between nations. He talked about how the two countries actually traded more than ever with each other last year. And I know there's inflation in there, so, you know, these numbers tend to grow. But it is worth making that point, isn't it? That despite all of the talk, and we did it just last hour, we were talking about decoupling or de-risking or deglobalization or all of these sort of phrases that we have to explore and examine and talk about on a geopolitical front. But at the end of the day, these two massive economies, the biggest in the world, are still trading more with each other than they have in the past.
And that's why the health of the Chinese economy is so important for the US. And we're seeing, of course, those warning signs about the Chinese economy in recent months. We're seeing China start to step up stimulus to protect its economy. And of course, the flow-on effect there is enormous, because if China goes down, really, so does the rest of the world. So it's in the US interest to have that economic relationship on a fairly even keel. I mean, the flip side is that for all the talk about onshoring and reshoring and reindustrialization that's gone on also with the US, bringing, you know, businesses back to the US, Europe bringing them back to invest in Europe, self-sufficiency and everything in the tech space, particularly in chips, is that in the end the relationship is still so interconnected and still so interdependent, and the idea of defraying these supply chains is very, very complex and not something you can do overnight.
Yes, and talking about the interdependencies there, he makes the point you're making, Anthony Blinken, in the questions at the Q&A session that just followed that press conference. China's broad economic success is also in America's interest, to underscore the relationship between the two. Interestingly, he did say towards the end of that press conference he expects additional senior visits with US officials. So perhaps suggesting that we might see a meeting of Xi and Biden, and that's been talked about for a long time.
Well, that certainly seems to be the hope on both sides. I mean, it seems like, first of all, the Chinese foreign minister may now go to the US for a visit, so we get that level of meeting going on. But the idea is to pave the way for the US president and the Chinese president to sit down in person and not just have a meet and greet on the sidelines of a summit, but a proper sit-down meeting that goes for several hours where they really talk through some of these issues. And that might happen perhaps in India at the G20, it might happen at APEC in the US. It would be interesting if then that traveled on to perhaps Xi Jinping going to the White House to have a proper visit there. That would be quite telling. So we're looking for signs that they're going to move towards that kind of meeting in the latter part of the year.
And worth mentioning also, there's an important visit of senior Chinese officials to Europe this week as well, so we overlay that too. Bloomberg's Ros Matheson, thank you very much for joining us with analysis there of Anthony Blinken's visit to China. Coming up, James Athey joins us, Investment Director at Aberdeen Investments. We'll get back to the markets shortly. This is Bloomberg.
London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome to Bloomberg Markets, a special edition of the program. US public holiday today, so no bond or equity trading stateside. And so broadcasting here from London, I'm Anna Edwards with this special edition of Bloomberg Markets. Let's get an investor perspective this Monday, 12:16 here in London. James Athey joins us, Investment Director at Aberdeen, and he can give us his thoughts on the markets. James, very nice to have you with us. I want to talk to you about bond markets and FX and the things that are your bread and butter. But I suppose it's interesting to think about what we've seen in the rates market and how that sits with enthusiasm for stocks, which has seen a 5-week run higher on the S&P and the NASDAQ. Does that all make sense to you, James?
Not for the first time in the last few years, and I know I'm very much scratching my head. We can always, make somewhat convincing arguments ex post. We can, post hoc rationalize these moves, but on the face of it, you look at 2022 and really kryptonite for the equity market was expectations around tighter policy, so higher yields and particularly flatter yield curves were like an ice cold shower for the equity market. The last 8 weeks or so, we've seen a really, really unusual looking macro dynamic where we've had this big bear flattening, not just in the treasury curve, but curves across the world. We've seen the dollar sort of trapped betwixt and between, but we've seen risk markets really shrugging off just about anything that's been thrown at them and powering higher. It's all gone a bit parabolic in some quarters, and it does increasingly look, a bit technical, a bit FOMO, and probably a bit unsustainable.
A bit unsustainable. And what breaks then, James? Do we see stocks drop, or do we see the rates sort of frenzy that we've seen, higher yields, that peters out? What are you expecting to see change?
Yes, I mean, that's a good question, and it becomes quite difficult to answer in a credible fashion. I definitely think that, what we know is that rates have a direct impact on the economy in a deleterious fashion. That's why central banks are acting in the way that they are. They're trying to cool demand, they're trying to slow the economy, and so higher rates will do that. Whereas obviously higher equity prices, if anything, are a bit of a tailwind to the economy. So markets at the moment are to some degree fighting each other in the way actually that the UK government and the Bank of England have seemingly been fighting each other. I expect that the recession is the answer to all of these questions. And therefore, currently, I look very wrong because we're absolutely not in recession. And if anything, certainly labour market data has been surprising on the upside. But I do think that we are seeing just the sort of last legs and ultimately the lags of policy that we know exist and we know are probably longer and more variable than we'd like to admit. I think ultimately they will win out in the end, and we will see economic data coming off more significantly.
Okay, so economic data comes off more significantly. We do end up in a recession. Where seems most likely to feel that most then, James? Because the recession expectations have sort of ebbed and flowed stateside, the UK, Eurozone, all over Western markets.
Yeah, you're absolutely right. I think that's been one of the most pronounced features of this market environment, is that it's been quite mean reverting. The stories have ebbed and flowed along with what has been very volatile data. So if you go back to the back end of last year, Europe and the UK stood out as the most sort of pessimistic regions because of the cost of living, the energy shock, and what that was going to do both to consumers and to businesses. So once we saw natural gas prices moderating significantly, the narrative flipped, and suddenly Europe and the UK could prosper because they weren't having quite such heavy headwinds. Ultimately, I think we're all headed for a recession, but I would say I think the kind of Anglo-Saxon economies, the small, the open, those with housing markets which have done particularly well, but those which have got floating rate mortgage markets and where the feed through from monetary tightening into the consumer's pocket is a bit more direct, a bit more severe. And of course, Western economies tend to be very heavily reliant on consumption. So I think they're the ones that will feel the pain the most, but I do expect the US to be in recession also.
Where does that leave the UK then, the situation that you described there, James? Because it's open, of course, to there's some variable rates in the mortgage market, but some people have fixed, and it's those fixes that have sort of delayed the impact of the higher rates we've seen already, but look set to come through and be felt in the months and year ahead.
Yeah, exactly. It's like a delayed fuse on the bomb going off now. We know that the housing market roughly is split sort of 33% each way. So you've got 33% who are owners, but owners outright, 33% with a mortgage, and 33% who are renters. So straight away, that obviously tells you something about the sensitivity in terms of interest rates. But we also know that those short-dated fixed-rate mortgages, which had been taken out in the last few years, reach a peak in terms of their expiration over the summer months. So I do think that it's going to get particularly pernicious for the UK consumer through the summer into the autumn, and I expect that to be playing out in terms of the economic data. The Bank of England obviously knows this. They've talked about this. Last we heard from Andrew Bailey, he thought that only around a third of the monetary tightening to that point was actually acting on the economy. And it seems likely that the bank is being dragged back to the table to possibly even accelerate their tightening again at this late phase. So I think how quickly and exactly when it plays out in terms of the economic data, always difficult to say, but I do expect us to be on a downward path through the summer and into the autumn in terms of the economic activity data.
James, what will the political pressure on the Bank of England add up to, do you think?
Well, I think you're already seeing it play out. You see the testimony in front of the TSC, and whether it's questions coming from the right or the left, from blue or from red, everybody is concerned about what these hikes in interest rates are doing. We know that they're going to be having a particularly nasty effect on homeowners, but also those at the lower end of the income spectrum. We also know that, unfortunately, those cohorts are very large in terms of percentage of the population, not just in the UK, but everywhere. But equally, we know that the worst of all outcomes is for inflation to be allowed to run rampant. to be honest. That's why we have inflation targeting central banks, is to not get us into this mess. So we could spend hours talking about how we found ourselves here anyway, even though we have independent and inflation targeting central banks. But what the government, I think, needs to do is hold the line. It's somewhat concerning that we've seen headlines talking about price controls and about mortgage relief. Again, if we learn any lessons from the 70s, it's that trying to mask the price pressures gets you in a worse situation. What we need to do, unfortunately, is take the medicine. But I think the bank will be cognizant of the fact that these delays do exist, these lags in policy do exist, and that they need to try and buy themselves time. So I don't expect them to become as aggressive as the market is currently pricing, but they do need to continue to tighten monetary policy.
James, thanks so much for your time. We appreciate it. James Athey of Aberdeen, thanks for joining us on the special edition of Bloomberg Markets for this US public holiday. Now, the world's largest aviation showcase has returned. Plane makers are gathering at the Paris Air Show to announce new deals and innovations in a post-pandemic world. But despite the return of global travel, one airport is on a quest to ban private jets. Bloomberg's Guy Johnson reports.
Ibiza, Innsbruck and Cannes. Luxury destinations for Amsterdam's well-heeled jet set. Perhaps, though, not for long. Schiphol Airport has announced plans to ban private jets from its runways by 2026, setting a huge precedent for other travel hubs and generating plenty of controversy. As many as 17,000 private jets crossed Schiphol's runways last year, and the airport argues they're noisier and generate 20 times more carbon emissions per passenger than commercial flights. The plan was announced a few months after climate activists stormed Schiphol's tarmac to block private jets, and comes on top of the Dutch government's proposal to cap the total number of flights to and from the airport.
Every sector needs perspective. Perspective of the residents, of the people you work for the airlines, and for Schiphol itself.
The private jet industry says the unexpected ban will hit business travel the hardest.
Private aviation is a business tool, especially for Amsterdam, where the top 3 destinations are London, Switzerland, and France. So they're not really let's say, beach destinations and holiday destinations.
For now, the fate of Amsterdam's private jets remains unclear. The question now is, could the move accelerate the development of more sustainable alternatives?
That was Bloomberg's Guy Johnson reporting. And for more on the Paris Air Show, subscribe to the official Bloomberg Paris newsletter. Just a quick word on what we heard from Anthony Blinken, Secretary of State, was talking, of course, over in Beijing at a press conference. He says that the US is clear-eyed about the challenges posed by China, but he did reiterate the US commitment to the one China policy. He also said that he's concerned that China might be providing, he's concerned that Chinese companies might be providing Russia with war technology. Plenty more coming through from that press conference. We will talk about the macro economy next. This is Bloomberg.
ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment cost agreement on which we could lead the charge of air travel into a post-war Ukrainian recovery.
Welcome back to Bloomberg Markets, a special edition of Bloomberg Markets because, of course, it's a US public holiday, so no equity or bond market trading stateside. Markets up and trading here in Europe are down, in fact, though, by 0.6% on the stock 600. Let's pause our market conversation, though, to bring you an important conversation. Global transportation ministers met this weekend at a G7 meeting in Japan. Bloomberg's Haslinda Armin spoke exclusively to Pete Buttigieg, the US Secretary of Transportation.
As we seek to de-risk and diversify our supply chains and our economic relationships, we do want to make sure that these capabilities are not concentrated with any one country. Certainly with a country that may demonstrate a willingness to use these in ways that are not connected to what is the best going forward, either commercially or in terms of that rules-based international order. We want to make sure that at least when we can agree on matters from climate change to public health, that we're operating on a basis that can be understood to be for the benefit of all. Those are the kinds of things we're focused on here at the G7.
You talk about de-risking. Are there any other sectors that need de-risking? Some point to perhaps even the drug sector in China. I mean, the world is reliant on basic drugs when it comes to, China.
Well, I want to make sure not to wander too far outside of my own portfolio. I know that these are subjects of active conversation, both bilaterally and multilaterally. What I can say with regard to supply chains is that we have seen how if there is not